Hello everyone. Hello sir. Happy afternoon. Welcome to Revise and Recon Marathon session on CA Final Paper 3 Advanced Auditing and Professional Ethics. I'm Himnath. I'm also a CA Final student. I'm very happy to host this session. I'm very much delighted to welcome CA Vikas Oswal sir, who will be taking today's auditing marathon session, which will provide us the guidance for the November 2022 exam. And I would like to welcome all the CA final students. Students can post their questions in YouTube live chat box. We will take up the question at the end of the session. The session is timed from 2 to 5. So before the end of the session, 4:50, we will take up the questions. And I would like to introduce about Vikas Oswal sir for the benefit of the students. Sir is a qualified chartered accountant. He have been in teaching profession for more than 2 decades, especially expertise in teaching in audit. And sir is also teaching taxation and the company law things. And sir have also completed ACS and DISA diploma courses. I'm very much happy to host the session and listen to sir. Sir, you can continue, sir.
Thank you. Thank you very much, Hemant, for kind introduction. Glad that SICASA is thinking of planning of these kind of short capsule sessions, which will definitely help the students actually here. So that is the main advantage we have with these sessions. Anyway, now let me come to the point straight away. First of all, see, whenever you talk about CA final auditing as such, see, you divide the subject into 4 parts. Whenever you're reading 4 parts, you should make the division. The first of all, it is the standards on auditing. Then second one, professional ethics related chapters. Third one, company audit related chapters. And lastly, you have the other topics like bank audit, insurance, other topics which will be covered here. So whenever we talk about the, first of all, standards on auditing, see, standards on auditing, the examiner will test you for around 30 marks will come from standards on auditing. And professional ethics related chapters, which includes peer review, quality review, liability of auditor, you should read these chapters only together. They are linked with each other. This will be asked for around 20 marks. And company audit, audit of CFS, NBFC, PSU, corporate governance audit committee, this topic also they'll ask for 30 marks. So company audit suddenly has become a hot topic area actually because of several amendments in the Schedule 3, several amendments in CARO 2020. This has become a hot topic as on today. That's the thing here. Okay. Then we have other topic like bank audit, insurance, internal audit, operational audit, management audit, tax audit, audit under automated environment, investigation, due diligence, and the forensic audit. Okay, this is how you should divide it. Now, the bank audit related, the other topics, they'll fetch you around 20 to 25 marks. So the major crux here is definitely standards, company audit related chapter, ethics related chapters. So every topic will carry their own weightage. Now, first of all, let us talk about standards on auditing. Standards on auditing, you have SA 200, that is overall objective of independent auditor and conduct of audit as per the standards on auditing. Now, when we talk about SA 200, basically, my dear soldiers, understand that it gives the basic definition of auditing. It defines what is auditing. Auditing is a independent examination of financial information with an objective to give an opinion on such financial information. Now, opinion is of 2 types. There is unmodified opinion and modified opinion. Unmodified means it's a good opinion. Modified means it's a bad opinion. Okay. These opinions are elaborated in SA 700 and 705 respectively. So what does an auditor do? His job is to examine the financial information. Now, what is the objective of this standard? First of all, as an auditor, I have to obtain a reasonable assurance that whether financial statements are free from material misstatement, whether financial statements are free from material misstatement due to fraud or error, and whether financial statements are prepared as per applicable financial reporting framework. So is it prepared as per applicable financial reporting framework? Applicable financial reporting framework means it is nothing but the accounting standards. It is nothing but the accounting standards. So the second point is that whether the financial statements are prepared as per applicable financial reporting framework, which is nothing but the accounting standard. Then the next objective of the auditor is that he has to communicate. Auditor has to communicate as per the standards on auditing, and he has to report as per the standards on auditing. Now, when I say financial statements are prepared as per applicable financial reporting framework, it means whether the financial statements are prepared as per the what you can say as per the accounting standard. As per accounting standard, whether it is prepared or not, that we need to highlight actually. Then next one, the next important thing is that we talk about the limitations of audit. We discuss about the limitations of audit. Whenever I say about the limitations of audit, see, sometimes in spite of doing audit, the audit collapses, my dear soldiers. Audit is not successful. In spite of doing audit, audit is not at all successful actually. That's the thing here. So there are certain, what you can say, limitations of audit actually here. So we have certain limitations of audit. What are the limitations of audit actually here? See, audit risk cannot be reduced to zero. Audit does not give an absolute assurance. It gives a reasonable level of assurance. Now, what is the reason for that? First of all, nature of financial reporting. Now, financial reporting means what? If I ask 50% of the students, they don't know the meaning, but they say something. Financial reporting is another name for accounting, my dear soldiers. It's another name for accounting. So financial reporting involves subjective decisions, judgments, adjustments, especially if you take example of accounting estimates like provisions. Accounting estimates here is nothing but provisions and contingent liability. That's what we understand by it. Then nature of audit procedure. See here, because see, what is the purpose of audit procedure? Audit procedures are applied to obtain audit evidence. I will repeat the golden line of audit. Very important. It will cut across all the standards. Auditor designs and performs audit procedure to obtain SIRC. SIRC means sufficient and appropriate audit evidence to draw conclusion for the purpose of giving opinion to reduce the audit risk to an acceptably low level. I repeat, the auditor designs and performs audit procedure to obtain SIRC to draw conclusion for the purpose of giving opinion on the financial statement. That is what we mean or understand by the auditing. That's the thing here. Okay, fine. Now, further, so audit procedures are used to obtain audit evidence. Now, there are two types of audit procedures: risk assessment procedure, further audit procedure. Risk assessment procedure is basically to identify risk of material misstatement. Risk of material misstatement means problem. Another name for problem is risk. Remember that. Then further audit procedure are of two types: test of control and substantive procedure. Test of control, you check the operating effectiveness of the internal control. Whereas substantive analytical procedures, basically, so substantive procedure are of two types: test of detail and substantive analytical procedure. Test of detail means you check the transaction with the documentary evidence. Whenever you check the transaction with the documentary evidence, it is test of detail. Test of detail is nothing but vouching. And substantive analytical procedure, you analyze the transaction. So please understand that there are two types of audit procedure: RAP, FAP. RAP is applied to identify ROM, the problems. Based on RAP, you find out ROM. Based on ROM, you decide further audit procedure. Further audit procedure, two types: test of control and substantive procedure. Substantive procedure, again, two types: test of detail and substantive analytical procedure, where you analyze the transaction. So sometimes audit procedure will not give you audit evidence because management may not share the audit evidence, so on. Then timeliness of financial reporting and cost benefit analysis. I repeat again one more time. timeliness of financial reporting, and cost benefit analysis. So you also have the timeliness of financial reporting and cost benefit. Now, financial reporting, as I told you, what happens? Another name for accounting. Sometimes if there is a delay in addressing the information, more delay you give in terms of financial information, the value of that information will reduce drastically. 7 months, 1 year back information, the value will go down. Similarly, if the auditor is not properly compensated, he will definitely not do audit. That's the thing here. So cost benefit analysis should be taken into consideration. Then there are other matters like, say, there may be fraud occurred in the company, or there may be a situation going concern, assumption becomes an issue, related party transaction. These are the limitations of audit. Then auditor should act with professional skepticism. Now, what is professional skepticism? He should be alert. He should be questioning mind. He should he should make a critical analysis of the audit evidence. So auditors should behave with professional skepticism. Now, the golden line, again, it is repeated here. Auditor designs and performs audit procedure. What are the two types of audit procedure? Risk assessment procedure and further audit procedure. Risk assessment procedure is given in SA 315 and further audit procedure is given in SA 330. Okay. To obtain SAI, to draw conclusion for the purpose of giving opinion, to reduce the audit risk to an acceptably low level. So this golden line, it will cut across all the standards. Mainly this line is taken from SA 330, that is auditors' responses to assessed risk. Okay. Once you read SA 200, then what you should do, straight away you should jump to 700 series standard. Okay. Because see what happens, you should always fix the priority. First, you should finish off 700, then you should go to 600, 500. You should read from reverse. The problem with our students is that they read basics. Already you have read in CA Inter. Touch something which is complicated, touch something which is challenging, and you get more questions from 700 and 500 series standard. Actually, 700 and 500 series standard, you should be very, very thorough with actually here. 500 series is also very important. Then other standards you should read. So little bit smartness here. So 700 series. Now 700 series starts with SA 700, forming an opinion and reporting on financial statement. 700 deals with unmodified opinion. Unmodified opinion means good opinion. When do you give unmodified opinion? When there is no MM, there is no material misstatement, when SAI is available, sufficient and appropriate audit evidence available, and based on certain specific evaluation. Now, what are those specific evaluation? Why we started with 200? 200 will give you all basics. Finish that, understand that basics. Then you straight away jump to 700. Okay, you should know what do you mean by audit procedure, what is audit evidence. Basics you should be very clear. Then attack the 700 series standard. So when do I give unmodified opinion? When SAI is available, when there is no material misstatement, there is no MM, and based on specific evaluation. What are the specific evaluation? Financial statement discloses the accounting policy. Accounting policy is properly selected and applied. Accounting policy is disclosed, is consistent as per AFRF, applicable financial reporting framework. Accounting estimates are reasonable. So you have to make specific evaluations. These specific evaluations are required to be done. Then information in the financial statement is relevant, reliable, understandable, comparable. Terminology used is appropriate. Financial statement discloses transaction and events for proper understanding of the intended user of the financial statement. So you have to highlight this 700. So 700, it will give the opinion. See, you need to by heart the opinion paragraph. You have to use the phrase true and fair. Financial statement show true and fair view. In all material respect shows true and fair view, and it's consistent with AFRF, or it is prepared as per AFRF. So 700, it deals with the format of audit report, the title, the addressee, opinion paragraph, basis for opinion paragraph, going concern paragraph, then key audit matter. After that, management responsibility, auditor's responsibility. So you have to highlight. So they may ask you a question on what are the auditor's responsibility. Auditor's responsibility is very easy, but little lengthy. auditor's responsibility to express opinion on the financial statement, whether they are free from material misstatement, to identify the risk, to assess the risk, to design and respond to the risk. So these are the responsibilities of the auditor. So SA 700, forming an opinion and reporting on financial statement. That's the thing here. Then SA 701 deals with what you can say, deals with the key audit matters. It deals with the key audit matter. That's the thing here. That is what 701. Now 701, in that, what is key audit matter? Key audit matter are those matter which, as per auditor's professional judgment, are significant in the audit of current period financial statement. Key audit matter, it enhances the communicative value of auditor's report by ensuring transparency. Many people are not aware. Key audit matter is like a transparency paragraph. You're completely transparent. It enhances the communicative value of auditor's report by ensuring transparency. In key audit matter, you will highlight everything. What is the issue? What is the procedure? What procedure you applied? What evidence you obtained? What conclusion you drew? Everything is detailed in key audit matter. So it's a matter, as per auditor's professional judgment, is significant in the audit of current period financial statement. So they may ask you, what are the factors you consider for key audit matter? Key audit matter, basically, you consider areas of assessed from, then significant risk as per SA 315, significant auditor's judgment, accounting estimates having high estimation uncertainty, management judgment, and specific transaction and events. These are the things you will consider to determine what is key audit matter. And key audit matter, I always call it as a transparency paragraph. Completely auditor is transparent. Key audit matter is applicable more in case of a listed company. Key audit matter is not a substitute for the opinion paragraph. It is not a substitute for going concern assumption. It is not a substitute for going concern assumption. It is not a substitute for opinion paragraph. It is not a substitute, actually. That's the thing here. So it is not a substitute, actually. That's the thing here. So key audit matter, it is not a substitute, and that's the thing here. So this is what it is actually. That's the thing here. So key audit matter is not at all substitute, and that's the thing here. So this is the point you need to highlight, my dear soldiers. It is not a substitute for any of these things, actually. That's the thing here. Okay, fine. This is the thing actually here. Then it is not a substitute for going concern assumption, not a substitute for additional disclosure in financial statement, not a substitute for modification in auditor's report. You have to be very clear with this. Then SA 705 deals with modification to internal auditor, independent auditor's report. Now, this particular standard, it deals with modified opinion. There are three types of modified opinion: qualified, adverse, and disclaimer. Qualified opinion, adverse opinion, and disclaimer of an opinion. Please by heart these opinion. Please remember the phrases which we use. See, qualified except for the matters given in the basis for qualified opinion paragraph. In adverse opinion, now you should use the phrase not proven fair. In disclaimer of an opinion, you should say, as an auditor, we are not able to express any opinion. And now in November 22 RTP, case study is given that you draft a disclaimer of an opinion. So please understand that all these four types of opinion, you should know how to draft the opinion paragraph. Not, first of all, unmodified or unqualified under SA 700. In 705, there are three types of opinion: qualified, adverse, and disclaimer. Many students, they find it difficult because the case study will be given, they say, express opinion. What opinion you will express? So please understand that for qualified opinion, you definitely will use the word misstatement is material, not pervasive. Adverse opinion, misstatement is material and pervasive. Disclaimer, undetected misstatement is material and pervasive. See, this thing, okay, you will give, but how will you express? Is it qualified, adverse, or disclaimer? In qualified opinion, there are one or two material misstatement, or one or two SAI is not available. One or two material misstatement, or one or two SAI is not available. Whereas in case of adverse opinion, what happens is that more than two material misstatement, SAI is available, evidence is there, but more than two material misstatement. Disclaimer, more than two SAI not available. Example, no evidence was available on inventory, trade receivable, trade payable. Now in this case, I will give disclaimer. but no evidence available for investment in a foreign associate. Only one item evidence not available. I told you 1 or 2 SI not available. You will give qualified opinion. So you'll end up giving qualified opinion. So that's the thing here. Suppose say there is 1 issue, 2 issue, qualified. More than 2 issue, then you should give a disclaimer of a opinion. That's the thing here. Okay. I hope you're clear with this. Then SA 706 talks about emphasis of matter paragraph and other matter paragraph. Emphasis of matter paragraph is a paragraph part of auditor's report which refers to matters presented and disclosed in the financial statement. It is referring to matter which is presented and disclosed in the financial statement, which as per auditor's judgment is important to the intended user understanding of the financial statement. Whereas when it comes to the other matter paragraph, whenever we talk about the other matter paragraph, soldiers understand that other matter paragraph, my dear soldiers, understand very clearly that whenever other matter paragraph are those paragraph which is other than what you can say the emphasis of matter paragraph, and that's the thing here. So you have what you can say emphasis of matter paragraph, and second one, my dear soldiers, is the other matter paragraph. That's the thing here. Okay. So other matter paragraph, and that's the thing here. So now in such case, actually here, this is the point actually here. So I repeat again, emphasis of matter paragraph, and second one is the other matter paragraph. Other matter paragraph is a paragraph including the auditor report that refers to matter other than the financial statement and audit financial statement. See, in emphasis of matter paragraph, you will refer the matter related to financial statement. In other matter paragraph, you refer to matter other than the financial statement, which as per auditor's judgment is important for intended user understanding of auditor's report. See, please understand, in emphasis of matter paragraph is more like a caution paragraph. Auditor is cautioning about some items in the financial statement. Whereas other matter paragraph is something where auditor wants to highlight something about the audit. He only talks about the audit. Okay. Then SA 710 comparative information. What is comparative information? It's an amount and disclosure of the prior period, which is presented along with the current period financial statement. There are two approaches here, corresponding figure approach, comparative financial statement approach. Both are prior period information. Both are amounts and disclosure of the prior period. See, example, you're doing audit of 21-22. That is current period. 2021 will become comparative information. Comparative information is of two types, corresponding figure and comparative financial statement. Corresponding figure are the amounts and disclosure of the prior period. It is a type of comparative information which is presented as an integral part of current period financial statement. But when you see corresponding figure is also prior period, comparative financial statement, that CFS, that is also prior period. Then what is the difference between these two? In corresponding figure, you will express, my dear soldiers, you will express the opinion. That's the thing here. So in corresponding figure, what happens, my dear soldiers? You as an auditor, you are expressing opinion. That's the thing here. So you are expressing opinion. That's the thing. That is corresponding figure. Whereas comparative financial statement, what happens is that, so in corresponding figure, you express the opinion. Whereas in case of the comparative financial statement, so whenever we talk about the comparative financial statement, what happens? You are expressing opinion both on current period as well as the comparative information. In corresponding figure, you are expressing opinion only on the current period. In comparative financial statement, both current period as well as prior period. In India, we don't follow comparative financial statement approach. Many students are not aware. Simply they read. Corresponding figure means what? It is presented along with the current period, but you are not doing audit of corresponding figure. You're doing audit only of the current period. But there are some exceptions when your auditor will express opinion also on the corresponding figure. This is very important. What are the three exceptions? When prior period financial statements are not audited, when modification is given in the prior period, which is unresolved, when prior period auditor has given a unmodified opinion, but we find a material misstatement in the prior period. Okay, so know the exception. What is the exception? When auditor will express opinion also on the corresponding figure. Then SA 720, auditor's responsibility in relation to other information. What is other information? Other information are those information other than financial statement and audit report, which is included in the annual report of the company. See, whenever a question is giving word called annual report, immediately you should link with SA 720. SA 720 is now heavily trending. Annual report is a yearly document prepared by management. It contains what? A financial statement, audit report, corporate governance report, corporate social responsibility report, board's report, ratio analysis, trend analysis. It will contain the capital expenditure report. It will contain various reports are there. This annual report is prepared by management, sent to the shareholder. Now, what is other information? It is any information which is there in the annual report, but it is other than financial statement and the audit report. Remember that. Now, here in SA 720, what they will ask you is that what is the, suppose say there'll be some information in the board's report, it'll be inconsistent with financial statement. So there is a material inconsistency between financial statement and the other information. There may be some consistency. So you should resolve those inconsistencies. You should request the management to resolve. If they don't resolve, then you should request the TCWG to resolve. Okay, that's the thing here. Then they may ask you in other information, what are the amounts on which you highlight it actually? What are the amounts actually here? I have created one mnemonic for this. So what are the amounts which becomes a part of other information? Okay, you can take a screenshot of it and keep it silica. We don't have time for discussing in depth, but I've just kept a mnemonic silica actually, like selected operating data, items of summary key financial results, net income, EPS, liquidity, capital resource, interest coverage ratio, capex, amount involved in guarantee. So what are the amounts in case of other information? This will be presented in not in the financial statement, it will be separate. Somewhere it will be separate. But that information and this information, financial statement information, should be consistent. Example, Board of Directors report has given turnover 80 crores. But if you read financial statement, turnover is hardly 10 crore. Then there is a difference, because majority of people will read board's report. They will not read the financial statement. There should not be any material inconsistency between the other information and the financial statement. Similarly, this also you can take a screenshot. So what are the other items? I have created a mnemonic called diamond. What are the other items which are example for other information? Okay. Description of guarantee, contractual obligation, related party, articulation of commodity, forex, management qualitative assessment, overview of strategy, nature of accounting estimate, description of market prices. Just have this screenshot. One is silica, one is diamond. Okay, remember this, very important. Okay, fine. Let me move forward. And diamonds, S is added, specific factors influencing entities' profitability. Then SA 600 series standard. In SA 600 series standard, there are three standards. One is SA 610, using the work of the internal auditor. As an auditor, who is an internal auditor? Internal auditor is basically who evaluates the financial, operational, administrative aspect of an enterprise. Internal auditor will be appointed by the management. Now, how do I rely upon the work of internal auditor? You have to see the competence and capability of the internal auditor before relying actually here. You have to see that whether what is the organizational status of internal auditor, what is the policies and procedure for internal audit function. You have to see what are the factors I should consider while relying on the internal auditor. Okay, they may ask you. Then another very important question they may ask you, internal auditor providing direct assistance. Can an auditor takes the assistance of internal auditor providing direct assistance? Yes. Here what happens, the law should provide, law should permit the same. Our law should not create any kind of prohibition for internal auditor providing any kind of direct assistance. That's the thing here. Okay. So this is the point actually. So internal auditor providing what you can say direct assistance. That's the thing here. So this is the scenario actually here. That's the thing is that. So now in such case actually here. So this is what SA 610 internal auditor providing the direct assistance. That's the thing here. Okay. So now this is what you need to understand, my dear soldiers. Then next one, this is the thing actually here. The next thing is that actually here, this is the point actually here. So this is the thing. So SA 610 talk about the internal auditor. That's the thing here. Then SA 620 talks about what you can say the relying upon the work of the expert. Now, internal auditor providing direct assistance. Let me complete one point. I cannot take the assistance everywhere where judgment is involved, where risk of material misstatement. So wherever the judgment is involved, I should not take the assistance of the internal auditor in case of accounting estimate. Okay, for obtaining direct confirmation. For compiling the information, I can take their help. SA 620 talks about expert. Expert, whenever you're reading SA 620, you should link it with SA 500. SA 500 audit evidence talks about management expert, whereas SA 620 talks about auditor's expert. Some people are not aware of this also. So SA 500 management expert is appointed by the management. Sometimes in the question, they will ask you, lawyer is appointed by the management. You should not give reference to 620. You should give reference to SA 500. Expert is a person other than, what you can say, who has an in-depth knowledge other than accounts and auditing. Example for expert could be engineer, lawyer, actuary. Okay. So they may ask you a question that what are the reports which are issued by expert. They may ask you a question on agreement between the expert and the client. So whether there should be an agreement. Yes, first time if you're using the work of expert, then definitely there has to be an agreement between the expert and the auditor. Okay. Then next one, SA 600, using the work of another auditor. Now, what are the factors you will consider while using the work of another auditor? You will consider the findings of the another auditor. You will also consider what you will do is that you will consider the findings of the another auditor. That is the first thing actually here. This is the point actually here. So what you will do is that you will consider the findings of the another auditor. That's the thing here. Then next one, that's the thing is that, so SA 600 is what come on. You as an auditor, you are considering the findings of the another auditor. That's the thing here. And the thing is that you will evaluate the procedure performed by the another auditor. You will evaluate how the work performed will be useful for the principal auditor. Whenever you're reading SA 600, you should remember, you should use the word principal auditor, not just auditor, principal auditor. Similarly, for SA 610, you should use the word external auditor. They are the same auditor, but words should be proper. Then you should consider the significant findings of other auditor. Okay. Then you should also take into consideration that what are the accounting policies of the component. Are they consistent? Okay, fine. Next one, SA 500 series, very, very important standard series actually. So immediately after 700, you start off with 500 itself. 600 also, you can take it later. 500 audit evidence, it talks about reliability of audit evidence. When audit evidence is reliable, when it is obtained from independent source outside the entity. When it is reliable, when it is in a written form, then an oral form. When audit evidence is reliable, when it is an original document, then a photocopy. When it is reliable, when it is obtained directly by the auditor, then through the client. Then it also talks about the audit procedures. Audit procedure comprises of inquiry, seeking information from a knowledgeable person within or outside the organization, inspection of books, records, documents, observation, looking at the activity performed by the management. Then analytical procedures, evaluation of financial information through analysis of plausible relationship between financial and non-financial item. Then also you have the external confirmation where we obtain, it's a type of audit evidence where direct confirmation is obtained by the auditor. Then recalculation checks the mathematical accuracy, reperformance. So reperformance. So we talk about even the aspect of what you can say the reperformance, and that's the thing here. So reperformance is management's independent execution. So when we talk about the reperformance, my dear soldiers, reperformance is nothing but it's a management's independent execution. That is what we understand by the reperformance. That's the thing here. So again, I repeat, my dear soldiers, reperformance is a management's independent execution. That's the thing here. That is what you need to understand about what you can say the reperformance. That's the thing here. Okay, fine. Then, so we talk about what you can say this is the thing actually here. So now in such case actually here, this is the point actually here. So this is what we understand by reperformance. That's the thing here. So we highlight about what you can say reliability of audit evidence, audit procedure, and what you can say management expert. That's the thing here. So different types of audit procedures are there. Sir, one doubt will come. Sir, we talk about audit procedure earlier, RAP, FAP. This is what audit procedure. RAP, FAP, they are all mega audit procedure. Under that, you have micro audit procedure like inquiry, inspection, observation. Okay. Whenever a question is asked on audit procedure, you can highlight this. Then 500 talks about management expert. I already told you, expert who is appointed by the management. You have to see the competence, capability of the expert. You have to understand the work of the expert. You have to see the data, source data used by the expert, assumptions made by the expert. Next one. The auditor designs and performs audit procedure to obtain SAI, to draw conclusion for the purpose of giving opinion, to reduce the audit risk to an acceptably low level. Now, as I told you, this is a universal line. Audit procedures are given in 315, 330. It is also given here. They are part of the main audit procedure. To obtain SAI, audit evidence is given in SA 500 series standard. Okay. Now, I already told you audit procedure, two types, RAP and FAP. Now, assertions. Now, you try to obtain evidence on assertions. Now, what is assertions? It's a statement made by management. Basically, it's a statement made by management on the financial statement. Assertion is on account balance. That is nothing but on the balance sheet item. Who makes the assertion? Management. I, as an auditor, I have to obtain a SAI on these assertions. Okay. Account balance means balance sheet item. Assertions on balance sheet item. Then, so what are the assertions? Existence, rights and obligation, completeness, and valuation. Existence, that is whether the assets, liability, equity exist, whether the entity has a right over the asset, do they have a obligation to pay certain liability, completeness, and valuation. Then completeness means there should not be any omission of asset liability. Then assertion on class of transaction is nothing but the P&L item. You make assertion on P&L item like occurrence, completeness, accuracy, cutoff, classification. Then lastly, you make assertion on presentation and disclosure, which is nothing but notes to accounts like occurrence, rights, obligation, completeness, okay, classification and understandability, and accuracy and valuation. These are the various assertions management makes. I, as an auditor, I have to obtain SAI on these assertions. The next one, SA 580, written representation. Now, whenever we talk about the written representation is a written statement made by the management, either to confirm certain matters and to support certain audit evidence. So, written representation you obtain whenever there is a lack of audit evidence. It is obtained from the management. Okay. So, that is the thing here. Now, written representation is a necessary audit evidence. It is not a SAI. It is a NAI, but it is not a SAI. See, for example, you want to know about the related party, management will give a written representation. You want to know what accounting policies they follow, management will give written representation. The date of written representation should be before the date of audit report or near the date of audit report. The period covered by the written representation will be in reference to all the periods which are given in the financial statement. If the written representation is not provided, you should inquire with the management TCWG, find out the reason why it is not provided, and take suitable action accordingly actually here. And you should explain the impact on your audit report. Then SA 501. SA 501 talks about three things. It talks about existence and condition of inventory. It talks about litigation and claims and segment reporting. Existence and condition of inventory, you have to see the management, observe the management count procedure. You have to inspect the inventory. You have to see the final inventory record. You have to observe the physical count by the management. As an auditor, I act as a observer. That's the thing here. If the inventory is lying with the third party, you obtain confirmation from them. Sometimes physical inventory count is impracticable because of the nature of inventory and because of the location of inventory. Then litigation and claims, see the correspondence from the legal counsel, what is the correspondence received from them. And in case of litigation and claim, you have to see the minutes of the meeting, you have to see the discussion between management and TCWG. And lastly, you have segment reporting. You should ensure that segment reporting is presented as per applicable financial reporting framework. Then SA 505 talks about external confirmation. In this topic, you should thoroughly read what is positive confirmation request, what is negative confirmation request. and what are the factors you will consider to design the confirmation request. Confirmation request means it's like a letter written by me to the client, to the third party with whom the client is dealing. Debtors, creditors, stock held by third party, investment held by third party, okay, bankers, lenders, borrowers. So two types of confirmation requests are there, positive and negative. Now, what do you mean by positive, my dear soldiers? Positive, whether the balance is agreeing or not, you obtain a confirmation. What is negative? Only when they disagree, you obtain the confirmation. Then you have SA 510 opening balances here. Whenever we talk about SA 510 opening balances initial engagements, the auditor must obtain SAI. That's the thing here. So this is the point actually. That's the thing is that. So I repeat again one more time. The auditor must obtain SAI. He has to obtain a sufficient and appropriate audit evidence. That's the thing here. So as an auditor, I have to obtain a SAI. That's the thing here. Okay. So this is the thing actually here. So whether the opening balances are materially misstated, auditor must obtain SAI whether the closing balance of the prior period are properly carried forward as the opening balance of the current period. Auditor must obtain SAI on the opening balances by perusing the what you can say, the financial statement of the prior period. Don't forget the word perusing. Okay. And SA 550 deals with the related party. Now, related party transaction should be on an arm's length basis, and is it in the ordinary course of business? You have to see the business rationale of the transaction. You should understand that management has a clear-cut understanding of the terms and condition with the related party transaction. Related party transaction, how do I identify? I have to see the income tax return. I have to see the agreement with management and those charged with governance. I should see that whether any transaction which is outside the normal course of business. Example, any premises are given without any consideration. Whether any premises is given on rent without any consideration. Like that. So you have to see any transaction which is outside the normal course of business that you need to highlight. So in the standard SA 550 related party, please be clear with what are the transactions which are outside the normal course of business, and how do you identify the related party, like looking at income tax return, minutes of meeting. Then SA 560 subsequent events. Subsequent events are those events which occur between the date of financial statement and date of audit report, and any event which occur after the date of audit report. Now, subsequent event, two types: adjusting, non-adjusting. Adjusting events are those events which provide evidence that the condition existed as on the date of financial statement. Non-adjusting events are those which provide evidence that the condition arose after the date of financial statement. So you have two types of events, my dear soldiers. You have the, what you can say, the adjusting events, and what you can say, my dear soldiers, the non-adjusting events. That's the thing here. So I repeat again one more time. We have two types of event, that is adjusting events and what you can say, the non-adjusting events. That's the thing here. So two types of events which will come into picture. That's the thing here. So 560 deals with what you can say, the subsequent event. That's the thing here. So these are the pointers you need to highlight, my dear soldiers. That's the thing here. So SA 510 opening balances. That's the thing here. 560 subsequent event. You should know what are the audit procedures applied for subsequent event. Read the minutes of the meeting. Read the subsequent interim financial statement. Then obtain the understanding of procedure followed by management to identify subsequent event. Then what happens to a situation where you financial statement is issued, but you come across a subsequent event after the date of audit report? Then you have to discuss with the management TCWG. Are you required to amend the financial statement? You have to see. So focus on those topics. In 570, going concern, very important lines are: auditor must obtain SAI on the appropriateness of management use of going concern base of accounting for the preparation and presentation of financial statement. Auditor must obtain SAI as to material uncertainty on events and condition that causes a significant doubt on the entity's ability to continue as a going concern. What is the impact of going concern on the audit report and the financial statement? So going concern, very important. They may give a question on this actually. So what are the indicators, like financial indicator, operational indicators, other indicators? They may highlight questions on this. Then SA 540 deals with auditing accounting estimates. Accounting estimates are nothing but provisions and contingent liability. Okay. So accounting estimates will involve a lot of judgment. There may be what you can say accounting estimates with high estimation uncertainty. There may be accounting estimates with low estimation uncertainty. Then what are the risk assessment procedure for accounting estimates? That you please be thorough with it. That's the thing here. So what are the procedures you apply for accounting estimate? You have to be very clear. The next one, you have SA 530 audit sampling. Whenever we talk about the audit sampling, my dear soldiers, application of audit procedure to less than 100% of transaction is audit sampling. Then approaches of sampling could be two types: statistical approach, non-statistical approach. In statistical approach, we use random selection technique, usage of probability theory, measurement of sampling risk. In non-statistical approach, we use our own judgment and knowledge. Then we have sample design. Sample design means quality of sample. So what is the purpose of the audit procedures? What are the characteristics of population from which the sample is drawn? What is the specific purpose you want to achieve? And what is the combination of audit procedure which will help you to achieve the purpose? See, sample design is talking about the quality of sample. You will always go for high value item. Audit effort are directed towards high value item. Sample design can be done in two ways. One is stratification, one is value weighted. Stratification means you divide the population into subpopulation as a strata, and value weighted means you divide it on a monetary item. Then next you have sample size. You have to determine the sample size where the sampling risk can be reduced to an acceptably low level. And after this, after sample size, you have the selection of sample. You have random selection technique where you're using a random number table to select a sample. Then, so first one is random selection technique. That's the thing here. So the first and the foremost thing is that what you can say the random selection technique. Second one is systematic selection technique or interval sampling. Whenever we talk about systematic selection technique or interval sampling, it is nothing but you select a sample, but there is a constant interval in the sample. That is called as the systematic selection technique. That's the thing here. So I repeat again, whenever we talk about systematic selection technique, we select a sample. There is a constant interval which is involved here. That is called as systematic selection technique. That's the thing here. Okay. Then you have haphazard selection technique, which is not a structured selection technique. Then you have monetary unit selection technique, where the sample size, sample design, selection of item is based on monetary item. Then you have SA 520 analytical procedure. What is analytical procedure? It's an evaluation of financial information through analysis of plausible relationship between the financial and non-financial item. So it's an evaluation of financial information through analysis of plausible relationship between the financial and non-financial item. So if suppose say there are inconsistent relationship or there is a significant fluctuation, you have to do the investigation of the same. Then analytical procedure is used as a substantive testing. That's the thing here. So analytical procedure is basically, it is used as what you can say as a substantive testing, and that's the thing. It is used as a substantive testing. That's the thing here. Okay. That is what you need to understand about the analytical procedure. That's the thing here. So I repeat again, analytical procedure is used as a what you can say as a substantive testing. That's the thing here. So that is a pointer you need to highlight actually. That's the thing here. Then, so it is used as a substantive testing. That's the thing here. And then next what we have is that, so what you have to see the suitability. SEED means ES, suitability of analytical procedure. Is it suitable or not? Next one, you should evaluate, evaluate the reliability of data. How do you evaluate the reliability of data? Scan, source of data, comparability of data, all the controls in the preparation of information, nature and relevance of information. Scan, source, comparability, all the controls and nature and relevance of information. Then E, expected amount or expected ratio, and D, determine the difference between the expected amount and the recorded amount. So analytical procedures can be used as what you can say as a substantive testing. It is used as a substantive testing. That is the thing. That is what happens in analytical procedure. Analytical procedure you're using as a substantive testing, that is seed and scan. That's the thing here. That is what we used in the analytical procedure. Okay. So these are the pointers you need to understand about the analytical procedure. So they are used as a substantive test, that is seed and the scan. That's the thing here. Now, next series is 400 series. 400 series, my dear soldiers, you have SA 450. SA 450 deals with what? Misstatement. What is misstatement? Any omission or commission in the amounts, presentation, disclosure, where there is a difference between the amounts which is presented in the financial statement and as per applicable financial reporting framework. So misstatement is something, any omission or commission, which is where the amounts are different from what is given in the applicable financial reporting framework. What one question they may ask you is that, so why there is a misstatement? One is there is an inaccuracy in the processing of data, omission of the data, amounts and disclosure. There may be omission of amounts and disclosure. There may be incorrect accounting estimates. And lastly, the judgment of management is unreasonable. Unreasonable are related to accounting policy. It may be unreasonable towards accounting policy or accounting estimate. Okay. So there may be inaccuracy in the processing of data. Like for example, 2 into 2 will give you 20. Or omission or incorrect accounting estimates, or there may be a wrong judgment. Judgment may be unreasonable in nature. That's the thing here. So as an auditor, what I should do? First, I should determine uncorrected misstatement. I should request the management, please rectify. If they rectify, apply the procedure, whether they are rectified or not. And if they are not rectified, then whether the aggregate of uncorrected misstatement are material or not material. You have to see the size, nature, and effect of the uncorrected misstatement. I repeat again one more time. The size, nature, and the effect of what you can say the uncorrected misstatement. That's the thing here. So I repeat again one more time. The size, nature, and the effect of what you can say the uncorrected misstatement. That's the thing here. Okay. Next one, we also have what you can say SA 402. SA 402 basically deals with service organization. Basically, you should understand whenever you read a question where there is some outsourcing happening, that is called as service organization. So a company is outsourcing. Now, what is the nature and significance of service by the service organization? That you have to see. Example, payroll is outsourced. Example, entire accounting is outsourced. So what is the nature and significance of service by the service organization? What is the effect of user entity control? See, there is a user entity. They have outsourced their operation to service organization. There is payroll. Service organization will have an auditor called service auditor, and user entity will have an auditor called user auditor. So user auditor will check all these things. He will see the nature and significance of service by service organization. He will see the effect of user entities control. He will see the nature of communication. What is the nature of communication? Then he will obtain the understanding of service. What type of service are being given? Then the financial reporting actually. So what is the financial reporting? Now, he shall not refer to the work of service auditor. So we don't have to refer to the work of the service auditor. Now, suppose say what happens is that, suppose say we will, the user entity will outsource to service organization. Service organization may in turn outsource to sub-service organization. There also the same thing you have to highlight. You have to check the nature and relevance of services, nature and significance of services, effect of user entities control, what is the nature of communication between user entity and service organization. You need to check the same thing. Now, service auditor will issue two types of report, type 1 report, type 2 report. Type 1 is on the, what you can say, design of the internal control. Whereas type 2 is on the design and operating effectiveness of the internal control. Type 1 is on the design of the internal control. Type 2 is on the design and operating effectiveness of the internal control. Okay. Once you finish 700, then you go finish off 500, then you go back to 600, then you come to the 400 series standard. This is how you should prepare. Then 300 series standard. 300 series standard starts with the planning. Planning has got 4 stages. One is the preliminary engagement activity. So planning has got 4 stages. First is preliminary engagement activity. What is preliminary engagement activity? whether I should take up the audit or not. Whether I should take up the audit or not, acceptance of the client and other things. Second stage of the planning is what you have overall audit strategy. Now, what is overall audit strategy? Overall audit strategy is basically deals with STD, scope, timing, and direction of audit. Scope of audit, timing of audit, direction of audit, and it is a basis for development of a detailed audit plan. That is overall audit strategy. So as an auditor, you have to ascertain the reporting objectives for the timing of audit, nature of communication, auditor's professional judgment, results of preliminary engagement activity, nature, extent, timing of resources. Resources here means article assistant. So first stage is preliminary engagement activity. Should I take up the audit or not? For example, acceptance and continuance of client. If the client is doing illegal business, I will not take up the audit. Second stage is overall audit strategy. There are three things: scope, timing, and direction. Scope, what to check; timing, when to check; direction, how to check. Resources here means article assistant. So what are the resources? You should use them in specific audit area. What is the amount of resources? When the resources are utilized? How the resources are managed, supervised, and directed? Then third stage in this 300 is audit plan. In audit plan, they talk about audit procedure. So that is why RAP, FAP will come here. Then already I told you about RAP and FAP, risk assessment procedure and further audit procedure. Then as an auditor, definitely you should have the knowledge of the client's business. Knowledge of the client business is necessary. What is the industry in which they are operating? What is the regulatory requirement applicable to them? What is the nature of entity? What is the entity's selection and application of the accounting policy? And next one, you have nature, extent, timing of the, what is the nature, extent, timing of the direction, supervision, review of the engagement team? That's the thing here. So I repeat again, the nature, extent, timing of direction, supervision, review of the engagement team. That's the thing here. Okay. And next one, my dear soldiers, is the, what you can say, the audit program. That is the thing actually here. So engagement team here means article. So how do you direct, supervise article? You have to, on what factors does it depend? It depends upon the size of the entity, complexity of the entity, areas of audit, risk of material misstatement, competence and capability of the engagement team. Then audit program are basically, they are the procedures to obtain the sufficient and appropriate audit evidence to express opinion on the financial statement. That's the thing here. So audit program is basically used to implement the plan. Please understand, in planning, 4 stages: preliminary engagement activity, whether I should take up the work or not. Second one, overall audit strategy, scope, timing, and direction of audit, and development of detailed plan. Third stage is audit plan. In audit plan, you will have RAP and FAP. Fourth one is audit program. Audit program is nothing but steps, procedures to implement the plan. Remember that. Then SA 320 talks about materiality. An item is said to be material if it influences the economic decision of the user of the financial statement. Apply a percentage on a benchmark. Benchmark means basis to find out materiality. Example, you apply a percentage on a turnover to arrive at the materiality. It could be 1% of turnover. It could be 5% of profit, which is considered as material. Now, can I revise materiality? Yes. When you revise materiality at financial statement level, you may revise materiality at ABCD, that is account balance, class of transaction, and disclosure and presentation. When you revise materiality, you can also revise the performance materiality. So how do you calculate materiality? A percentage is applied on a benchmark to arrive at materiality. Say, for example, 1% of turnover is material. Then SA 315 talks about identifying and assessing ROM by understanding the entity and its environment. This standard, it explores the relationship between internal control and risk. Risk of material misstatement. See, ROM is a problem. Okay, it is nothing but a problem. And internal control is like a solution. Internal control is a policy and procedure of organization to ensure that business is conducted in an effective and efficient manner. So internal control is a policy and procedure of the organization. Okay, so there are 5 components of internal control: crime, control activity, risk assessment procedure, information processing and control, monitoring an entity and its environment. Then SA 330 talks about auditors' responses to assess risk. See, SA 315 mainly it targets risk assessment procedure. Risk assessment procedure, basically they are used to identify and assess ROM. Now, once that is clear, now SA 330 talks about further audit procedure. 315 talks about RAP, 330 talks about further audit procedure. So what is the auditor's responses to the assessed risk? FAP, you're already aware, two types of FAP, test of control and substantive procedure. Substantive procedure, again, two types, test of detail and substantive analytical procedure. The next one, you have SA 210 series standard, which talks about the agreeing to the terms of engagement. SA 210 deals with the drafting of engagement letter. Who is drawing the engagement letter? The auditor is drawing the engagement letter. So it more or less talks about the engagement letter. Engagement letter, it contains the nature and scope of audit. It contains the responsibility of auditor. It contains the responsibility of the management. These are given in the audit engagement letter. Audit engagement letter will contain all these things are given in the audit engagement letter. And recurring audit, when can I send the letter for recurring audit? Change of engagement. Sometimes the client will request to reduce the level of assurance. Change of engagement because of change in circumstances, because of a change in the requirements actually of the management, or there is a misunderstanding between management and a client, the auditor. That's the thing here. And SA 230 talks about audit documentation. The purpose of engagement team is to plan and perform. Basically, the purpose is to plan and perform the audit. Engagement team means article. So audit documentation is useful for direction, supervision, review of engagement team. That is article. Okay. Now, what is the form, content, and extent of audit documentation? It depends upon the nature, extent, timing of audit procedures, significant matters. Okay. Then risk of material misstatement. You should assemble the audit documentation within 60 days of issue of audit report. You should maintain audit documentation for minimum 7 years. You should document all the things, significant matters, judgment, everything should be documented and kept. Then you have SA 220. SA 220 deals with quality control in the audit of financial statement. Whereas SQC1 is also dealing with quality control. Many students are not aware that SQC1 deals with quality of entire audit firm. SQC1 deals with the quality of entire audit firm, whereas SA 220 deals with the quality of a individual. So SA 220 quality control deals with the quality of individual audit. Quality of individual audit, that is a major difference. You read one standard, know the difference, that's it. SQC deals with quality of entire firm. SA deals with quality of an individual audit, individual work. Now, what are the parts of it? Human resource. Human resource E is engagement performance. So briefing of engagement team, documentation, direction, supervision, review, comply the engagement standard. The next one, A, acceptance and continuance of client. L, leadership responsibility. M, monitoring. E is ethical requirement. So if you want high quality work, your resources should be very strong. You should do the audit work as per engagement standards. You should not accept a client who is doing illegal business. Leadership should implement the quality control standards. Okay, that's the thing here. These are the aspects of quality control. Whenever a question comes on quality control, 3 points, write down without forgetting. One is implementation of quality control system. Then work is performed as per professional standards and legal and regulatory requirement. And the engagement partner will issue the report as per the circumstances. Okay, these are the things actually. 220 is all about this. Then there you have standard 240, 250, 260, 265. Okay, these are the various standards, basic standards. In 240, please read the auditor's responsibility in relation to fraud. In 250, please read the auditor's responsibility. See, one trick what you should know, that any standard on auditing, first you read the auditor's responsibility, or you read what are the audit procedure auditor will apply. Because examiner, he will ask at the end of every question, as an auditor, what will you do? As an auditor, what will you do? As an auditor, what will you do? So what happens is that examiner will ask this question, as an auditor, what will you do? Okay. So be it SA 240, 250 also, non-compliance of laws and regulation. This standard is very important because now it is heavily trending. They had asked one question, suppose there is a violation of environmental law where National Green Tribunal is involved. What do you do? Whether you should consider? Yes, you should consider. 250 also, responsibility of auditor. 260, why there are Why communication is being done? Communication is done because difficulty faced by auditor, significant matters. You have to consider all those things. 265 talks about deficiency in the internal control. Okay, deficiency in the control. There may be control over fraud, control over related party transactions. So there may be certain deficiency in internal control. And ISA 299 talks about joint auditor. Joint auditors where more than one auditor is doing audit and expressing opinion on the financial statement. In case of joint audit, only the what you can say, all the joint auditors can issue report separately also if they have a difference of opinion. Okay, these are the standards on auditing. Standards on auditing, read 200, then go to 700 series standard completely, then finish off 500 series, then finish off 600 series, 400 series, then 300, 200, balance you can read that way. Okay, fine. So this is the points actually here. These are the various pointers. Now let me go to the next thing. We'll take a small break of 5 minutes here. I'll come back and start with the part 2. 5 minutes break. Yes. Now, let us go to the second part of our discussion, professional ethics related topic. From here, 20 to 25 marks may come from this particular area. Okay. Now, whenever we talk about the professional ethics actually here, first schedule, it has got 4 parts actually here. So part 1, professional misconduct in relation to chartered accountant practice. Totally, there are 12 number of clauses. Here, you should be very thorough with clause number 2. Clause number 2 talks about sharing of any fees, commission or brokerage to any person. See, as a CA in practice, you can't share any fees, commission or brokerage to any person, but there are some exceptions. As a CA in practice, you can share fees with partner, retired partner, legal representative of deceased partner. Okay, you can share fees with a member of recognized professional body, persons having prescribed qualification. So these members of recognized professional body could be company secretary, cost accountant, lawyer, engineers. So you have to be very clear with this actually. Okay, fine. So clause 2 of part 1 of first schedule deals with a CA will be guilty of professional misconduct if he shares his fees, commission or brokerage of professional service with any person, except they have given certain exception. You can share fees with another CA, member, partner, retired partner, okay, and a member of recognized professional body and person having prescribed qualification. Then next clause here, which is very, very important, often they ask, is clause number 6. Because clause number 6, it says that a CA in practice will be guilty of professional misconduct if he advertises his professional, if he solicits any client or professional work by way of advertisement, personal communication. Okay, do they solicit the client actually by that way? Okay, now there are exceptions. One, you can seek work from another CA. You can also respond to a tender. But where a tender is exclusive to a chartered accountant, you should not respond unless minimum fees is quoted. Then the clause 6 also talks about the website guidelines. Website should be on a pull basis, not on a push basis. You should not give the details of the client unless regulators provide that it should be given. Clause 7, very important. It talks about advertising the professional attainments. A CA will be guilty if he advertises professional attainment or uses designation other than chartered accountant. Recently, they were giving questions like, we can use designation other than chartered accountant. Can we use a designation like say any other designation for that matter, management consultant, merchant banker? No, only chartered accountant. Can I use educational qualification like CPA, Ireland? Yes, I can use it. Can I use the word like insolvency professional? Yes, insolvency professional also can be used. No restriction with that. Then next one, clause 8 talks about communicating with the previous auditor. Communication should be in writing. Now, what happens? You communicate and the letter is returned. Address, the office was found locked. Then it's okay, no problem. Then the communication is okay. Incoming auditor should communicate with the outgoing auditor. You send a communication by registered post. It came back that it is office was found locked, like that. So it's okay. It's a valid communication. Then communication should be done before the commencement of audit. And clause number 10 talks about that as a CA actually here, you should not charge fees on percentage basis, but there are some exceptions. You can charge fees on a percentage basis. Cooperative society auditor, liquidator can charge on percentage basis. Valuer of asset, the direct taxes, he can charge fees on percentage basis. So there are some, what you can say, it is allowed in certain cases actually where you can charge fees on a, what you can say, on a percentage basis, and it is on a percentage basis also it stands to be allowed, and that's the thing here. So we can charge fees on what you can say on a percentage basis. That's the thing here. So it is allowed. You can always charge fees on that basis. That is the thing actually here. Then you can charge fees on percentage basis for management consultancy service, debt recovery services, fundraising activity. You should remember those exceptions. Secret of professional ethics is that you should know exception for every clause. Clause 2, there is an exception with whom you can share. Okay. Similarly, clause 3, with whom you can, from whom you can accept, exception is there. Clause 4, with whom you can enter into partnership, you should know the exception. If you know the exception, you win the battle. Similarly, in standards on auditing, I was telling you, you should be having a knowledge of auditors' procedures, audit responsibility of auditor, what is the audit procedure you will apply, what is the responsibility of auditor. You should have that knowledge, because every question will end with, as an auditor, what will you do? Then clause 11 here is very important in part 1. Clause 11 talks about what you can say, CA should not engage into any occupation other than chartered accountancy. So what are the activities generally permitted? Private tutorship per week should not exceed 25 hours per week. Remember that. They may ask question on that. Then you can be an editor in a professional journal. You can be a justice of peace, notary public, special executive magistrate, MP, MLA, MLC. You can, then what you cannot be actually, like, for example, you require a special permission, for example, any family business, any employment elsewhere. Okay. Acting as a whole-time director, MD, you require a special permission. And clause 11 talks about CA will be guilty of professional misconduct if he allows any person to sign the balance sheet, P&L, financial statement, audit report. If I allow other person to sign, then there are exceptions here also. What are the exceptions? For example, I can issue bill, I can issue acknowledgement for receipt of cash. I can do those activities. Those activities are very much permitted. I can issue bills, and that's a thing here. Okay. So those activities are very much permissible, and that's a thing here. So that is a point you need to understand actually. So this is what we understand by what you can say the part 1. They deals with what you can say professional misconduct in relation to the CA in practice. That's the thing here. So what are the professional misconduct actually as far as the CA in practice is concerned? That you need to be very clear actually. That's the thing here. So what are the number of clauses actually? Clause 12, all these things you should be very clear. That's the thing here. Then part 2 of the first schedule deals with members in service. Please go through it. Members in service can neither accept any share or give any share. Part 3 talks about the any misconduct, members in general. If you're an FCA, if you're an ACA, you're using the letter FCA, and you are not giving any information to ICAI, council, committee, appellate authority, quality review board. You're not giving information. Are you giving false information to, while giving write-up, while giving responding to a tender? Those things are there. So just go through them. Part 4 deals with other misconduct. Here, very important, the second clause actually, rather. First clause, it says that CA will be guilty if he does any civil or criminal offense where he imprisoned not less than 6 months. Clause 2 talks about he brings disrepute to the profession. What is disrepute? Check bouncing. What is disrepute? Misusing the funds. What is disrepute? Giving bribes. What is disrepute? Like say, undue influence is being used. So anything related to your professional work, that is disrepute. Okay. So for example, one example was given where the bank wrongly created the account of auditor with 5 lakh rupees. Auditor withdrew the money. It's a disrepute to the profession. This is, you should remember. Okay. Now, what is the consequence of any offense under the first schedule? So what will happen is that the board of directors, they'll impose a penalty up to 1 lakh. So the penalty will start from say 1,000 rupees and it will go up to 1 lakh actually. That is a penalty actually here. And they may reprimand the member, mean warning to the member. They may be suspended for 3 months or more. That's the consequence actually here. Here, what happens, you should also be aware of independence of mind, independence in appearance. Independence of mind, internal world of the auditor. Independence in appearance means external world of auditor. Independence is the keystone of audit. Keystone of audit is nothing but the independence. As an auditor, you have to be what you can say independent. That's the thing here. Okay. So now there are various threats. For example, self-interest threat, where you are financially interested in the client. Self-review threat, your own work you are reviewing, your auditor, your accountant. Then advocacy threat, familiarity threat. Advocacy threat means you are advertising the concept, you're advocating the opinion of the client, there your objectivity is getting compromised. Familiarity threat, you're sympathetic to the client's interest. Close relationship with the client, familiarity threat. Intimidation threat means client is stopping you from doing certain things actually here. So he's preventing you from doing obtaining confirmation, or is restricting, or is aggressive that he will reduce your fees. So what is the safeguard you have to put? Safeguard, first of all, to improve the quality of audit and public confidence, you should maintain independence. You have to follow 3 principles: integrity, objectivity, professional skepticism. You should be consciously independent, and you should desist means stop, desist from taking any work which affects the independence. Next one, second schedule. When it comes to second schedule, there are 10 clauses. In second schedule, first of all, clause number 1, very important, because it discloses any information acquired in the course of professional work and without the consent of the client in writing or otherwise required by the law. This is very, very important. He discloses the information acquired in the course of the professional work. Then clause 4 is very, very important, where he expresses opinion on the financial statement of any entity where he has a substantial interest. Now, substantial interest means he is having 20% or more of stake, like that, substantial interest. Now, for example, there is a director of a company, he resigned and he is appointed as a direct auditor. No, there should be a gap of 2 years. You're a director, you resign, immediately you're acting as an auditor of that company. No, there should be a minimum gap of 2 years. Minimum gap of 2 years should be kept in this regard. Okay, that's the thing here. So we have what you can say the professional skepticism. That's the thing here. Okay, so these are the pointers you need to understand, my dear soldiers. That's the thing here. Okay, so these are the parameters, my dear soldiers, as far as the professional skepticism are concerned, and that's the thing here. Okay, this is the first thing actually here. So I hope you are clear. I hope you are understanding the point actually here. Then next one, my dear soldiers, next scenario which comes into picture. So as an auditor, you need to act with what you can say, you need to act with professional skepticism. That's the thing here. And next one, which comes into picture, my dear soldiers, we highlight actually. So as far as the thing is concerned, so are you maintaining a so clause 4 talks about there are some inconsistent relationship, like auditor cannot be accountant, auditor cannot be director, auditor cannot be liquidator, auditor cannot be a part-time lecturer in a college, auditor cannot be a member of cooperative society, GST auditor cannot be an internal auditor cannot be a GST auditor. Okay, like that there are some inconsistency. Clause 5 talks about auditor fails to disclose material facts known to him. Clause 6 talks about auditor fails to disclose material misstatement known to him. Clause 7 talks about auditor is grossly negligent of his duties and is grossly negligent and does not act with due diligence. There, any certificate was given without examining the record, where a circulation of newspaper is certified, but no examination of record is being done. Then clause 10 talks about auditor fails to keep the client's money in a separate bank account, or he fails to use the client money for the particular purpose. Example, client gave money to pay advance tax, but the auditor is using that money for his own personal purposes. Then next one, part 2 of the second schedule. Here clause 1 is very important. Clause 1. There are 4 clauses. Clause 1, it talks about that where auditor fails to comply with Act, regulations and guidelines. He is failing to comply with Chartered Accountant Act, regulations and guidelines. Chartered Accountant Act, for example, you should be aware of section 7, which talks about the designation used by chartered accountant should be chartered accountant. Clause 2.2 of Chartered Accountant Act talks about the CA in practice. Then you should be very thorough with not clause 2.2, section 2.2 talks about CA in practice. Similarly, section 21 deals with other misconduct. You should be thorough with that. Okay, and further in this particular thing, it also talks about guidelines. Now, guidelines are CA Council General Guidelines of 2008. Guidelines talks about what are the books and records to be maintained by auditor. He should maintain cash book and ledger. Auditor has a specified number of audit, maximum 60 tax audit he can take up. There are 3 partners. One partner does 180 audits. Acceptable. It is very much acceptable. Then relative, if he is doing an audit of an entity where relative is having a substantial interest, then in such case he'll be guilty of misconduct. Who is a relative? As per AS 18, father, mother, spouse, brother, sister, son, daughter. So relative, if they have substantial interest, then I'll be guilty if I take up their work. So it talks about specified number of tax audit. Then one new amendment which has come is network, which is also given network in guideline chapter 15. It talks about network. Now, what is a network? Network is a large structure for cost sharing, profit sharing, cooperation, common business strategy, common control, common resource sharing. That is called as network. See, just to give you a brief, in order to compete with Big Four, Institute says that you create network. Example, I'm in Bangalore. There's another person in Delhi. I have some work in Delhi. Now, what I do, I create a network firm between me and the another CA in Delhi. And I can tell the client that on pan-India basis, we provide services. So that is the purpose of network. Network is mainly to compete with Big Four. Small firms, they come together. So suppose they meet a client who says that I want services pan-India. What will you do? You require a network. Okay. You require a network, and that is what we understand by the network firm. That's the thing here. Okay. So these are the pointers you need to understand about the network. That's the thing here. Okay. So whenever we talk about a network, whenever we discuss about the network, my dear soldiers, in case of a network entity like network, actually here, network should always end with the name called affiliate. The word used is affiliate. You should register a network only with the word affiliate. This is a latest amendment and change which has happened in the Council General Guidelines of 2008. Then part 3 talks about, and in part 2, clause 3 is also very important. Clause 1 is important. Clause 3 talks about when you give a false information to ICAI committee, director discipline, board of discipline, disciplinary committee, appellate authority, when you give a false information to them. Okay. Then part 3, other misconduct, it talks about, it has got only one clause where the member may affect civil or criminal offense, imprisoned for more than 6 months. Now, any action under second schedule, the action is taken by disciplinary committee. What is the penalty? 5 lakhs. You should reprimand the member. Reprimand means warning, and there may be permanent removal of the members. Council General Guidelines, I already discussed. Network also I've discussed. And at the end, you can see affiliates. Network should always end with the name affiliate. They may ask you as a short notes, not short notes, as a question in the examination, as a even MCQ also for that matter. Then next one. Next one, the topic related to professional ethics is peer review. Peer review is another very important topic related to professional ethics. Peer review, simple word, work of one CA is checked by another CA. That is the thing actually here. Mainly, it focuses on assurance and attestation services. See, mainly assurance and attestation is another name for audit, and it's a broader term. It includes internal audit, stat audit, tax audit, concurrent audit, all types of audit. When I say assurance and attestation services, it is talking about the quality of attestation and assurance services. That's the thing here. Okay. So how the audit is being done, how the office systems are being maintained. So to enhance the quality of assurance services, we are enhancing the quality of assurance services. That's the thing here. The quality of reporting, that's the thing here. So we talk about the quality of reporting, that's the thing here. So quality of reporting, and that is what we need to understand actually here. So there is a, what you can say, quality of reporting, that's the thing here. Okay. And next one, you have training program of the staff, compliance of guidelines of member related to, they should maintain assurance register, assurance record. Assurance means it's a broader name for audit. Remember that. You have to use that word only as per the material. Articles should maintain work diary, maintain stipend to the article. All those things are there. Then what is excluded from peer review? Management consultancy engagement, representation to IT authority or GST authority, preparing tax returns or advising on tax matters, compilation of financial statement, preparing, compiling or collating of information and other financial statement, then testifying as an expert witness, providing expert opinion, due diligence, that's the thing here. So You testify as an expert witness. You provide expert opinion. Then you say due diligence. That's the thing here. So that is the point actually. So you testify as an expert witness. You provide expert opinion, and also what you can say due diligence. That's the thing here. So this is the point actually here. So this is the thing actually here. So testify the expert witness, providing expert opinion, and what you can say the due diligence. That these are all not covered under peer review. Okay. Now, what is the eligibility of peer reviewer? Amendment has happened here. ICAI material is silently amended. People are not aware. They are not given in any RTP. You should read the latest ICAI material. See, who can act as a peer reviewer? Member of ICAI. If he is doing a peer review of level 1 practice unit, then in such case, he should be in practice for 10 years or more. If it is level 2, practice for 7 years. Suppose, say, is in industry, from industry, he has moved to practice. Then in industry, 15 years, practice 5 years for level 1, industry 10 years, and practice 3 years for level 2 practice unit. He should undergo training under peer review, make a confidentiality, make a declaration of confidentiality. He should make a declaration of eligibility. Those things are there in peer. Who can act as a reviewer? Also, reviewer should not be guilty of any professional misconduct. So eligibility of reviewer change is there. Practice unit, level 1, level 2. They were never asking question on level 1, level 2 entity. Now they have started asking question on level 2 entity. What is level 1 practice unit? Practice unit means CA firm. Level 1 practice unit, basically they have following assurance clients. They use the word assurance. Assurance is nothing but audit. Listed company, central statutory auditors of bank, central statutory auditors of insurance company where they have a contribution of more than 50 crores, company where the borrowing is more than 50 crores, company where the net worth is more than 250 crores. That is level 1. Level 2 is what? The tax audit, stat audit, concurrent audit of any branches. Then also that is level 2 firm, and also where the net worth of the company is more than 5 crores. Okay. That is called as the where the amount which is borrowed is less than 50 crores, a contribution is less than 50 crores. Okay. And see, remember one thing, where the net worth is more than 250 crores condition I was talking about, level 1, even suppose say the subsidiary, joint venture, associate, their net worth is less than 250 crore, but their parent company net worth is more than 250 crores, they will also be classified as a level 1. Okay. So please read thoroughly level 1, level 2. Then execution stage is there. Execution stage, basically maximum time taken to complete peer review is 90 days. And maximum time spent by the reviewer at the reviewer is 14 days. MCQ, please be thorough with the numbers. Wherever you see numbers, please be thorough with that. That will be a favorite question of examiner, numbers, focusing on some numbers. So you should be very clear. They may ask you, in how many days peer review should be completed? 90 days. Okay. You're very thorough with numbers actually. That's the name. Wherever you see MC numbers like that, you write down and keep it. For example, the CAG will appoint the subsequent auditor within 180 days. 180 days number, keep it separately. Okay, so that's one thing. Reporting stage. Reporting, first they will issue a preliminary report and then they'll issue a final report. Okay, that's the thing actually here. Then next one, they may also ask you a question on internal control on independence in peer review. Whether they are having a policy on independence, is that policy communicated? Is that policy reviewed, monitored? Those things. Then next one is quality review. Quality review, basically it talks about the ensuring stat audit quality. See, peer review is very, what you can say, very detailed subject. It talks about all types of audit, talks about office administration, talks about staff training, members compliance of guideline, articles compliance of guideline. But quality review, basically it talks about certain things else actually. That's the thing here. So whenever we talk about what you can say, the quality review, basically you identify and address the various weaknesses. That's the thing here. So that is what we understand in case of the quality review. That's the thing here. So what are the deficiency related to audit actually? So quality review will cover only stat audit. It is covering only statutory audit. That is what quality review is. Quality review is as per the requirement of Ministry of Corporate Affairs. Peer review is as per the requirement of ICAI. Quality review leads to disciplinary proceedings. Peer review will not lead to disciplinary proceedings. Now they are asking a difference between peer review, quality review. This question is heavily trending in RTP. Okay, so what is the difference between peer review, quality review? Peer review, all types of assurance and attestation engagement. Quality review only stat audit. Peer review as per ICAI. Quality review as per Ministry of Corporate Affairs. Peer review, no disciplinary action. Quality review, disciplinary action will be there. So now what is the action taken by quality review board in case of non-compliance with requirement to standards of quality control, standards on auditing, accounting standard? They will file a case in the director discipline of ICAI to take necessary action under CA Act. They will inform about the non-compliance to regulatory body. They'll intimate to the concerned auditor. They'll consider whether the matter is complete, inform to the audit firm. So they are very, because quality review will result in action against the auditor. Peer review is not like. Peer review will tell, okay, you improve, no problem. So in the firm which are selected for quality review, it is on suo motu basis, where there is a fraud, indication of fraud. It may be requirement of a regulator like RBI, SEBI, or there are irregularities which are observed. So there you will have a technical reviewer for quality review. There will be a technical reviewer will be there actually here. And you'll also have what you can say the various technical reviewer will be there. Technical reviewer, who is a technical reviewer? He should be in practice for 15 years or more. He should be in continuous practice. He should be practiced for, he should undergo training under quality review. He should give a declaration of confidentiality. He should not be guilty of any proceedings in ICAI or any court. An audit firm under review will be taken. Now, technical reviewer will review the work of audit firm under review and report to quality review groups. Quality review groups is a small subset of quality review board. Quality review groups will report to the quality review board. That's the thing here. Then you have liability of auditor. Now, liability of auditor, this chapter is also a professional ethics related chapter. Here, liability under two things: liability under the Companies Act and liability under Income Tax Act. So liability under Companies Act, you have civil liability. For example, any misstatement in the prospectus where a person has subscribed the securities depending on the statement included in the or omitted from the prospectus, which is misleading. So there is a misstatement in the prospectus as per section 34 of the Companies Act. That's the thing here. So where the prospectus is issued, circulated and distributed, it is having an untrue or misleading and it has sustained losses or damages as a consequence of thereof actually here. So now every person who authorizes the issue of such prospectus shall be liable under section 447 of the Act. He shall stand to be liable under 447 of the Act. So even the, what you can say, suppose there is a misleading. So the person who authorizes the prospectus, the promoter, the director, person named as director will be liable in this case actually. Okay. This is the thing actually here. Then, so what happens is that, see, 34 deals with the criminal liability. Criminal liability, only the person who is authorized will be liable. Okay. Whereas 35 deals with the civil liability. There, in such case, 5 people will be liable: the director, the promoter, person named as a director, experts. Okay. That's the thing here. So any misstatement in the prospectus. So action will be taken under 447 of the Act. And what are the other criminal liability? See, one civil liability I discussed, misstatement in the prospectus. Same way, criminal liability in prospectus, that is misstatement in prospectus, only one person is liable. That is person who authorizes the prospectus. For civil liability, promoter, director, expert, everybody is liable. Then another criminal liability is that false statement issued by a CA, like he has issued a false report, false returns, false certificate, false prospectus statement. Then action will be taken under 447 of the Companies Act. Now, 447, what does it say? If the amount of fraud is 10 lakhs or 1% of turnover, then the person will be penalized 3 times the amount of fraud and imprisonment from 6 months to 10 years. 6 months to 10 years, 3 times the amount involved. That's the thing here. And if the amount of fraud involved in such case actually here, that's the thing is that, so that is a point you need to note actually very clearly. But if the amount of fraud is less than 10 lakhs, then the imprisonment will be up to 5 years. And if public interest is involved, then imprisonment can be up to 3 years. Okay. And the penalty can be extending up to the maximum, say 50 lakhs. That's the penalty will be extending actually. 447 deals with this. Then liability under Income Tax Act, liability will be taken under Section 288, 278, 12A and 271J. 288 means where a CA is guilty of professional misconduct, he cannot appear before any authority, any commissioner of income tax. He cannot appear on behalf of any assessee in the department if he is guilty of misconduct. Similarly, 278, it highlights that if a person is inducing another person to give a false statement, and which is leading to tax evasion of more than 25,000, there's a rigorous imprisonment of 7 years. It is less than 20,000, then imprisonment may be up to 2 years. Okay. Then, so first one, where person is guilty of professional misconduct, he cannot appear before income tax authority. Second one, where a person is inducing another person to make a false statement, an evasion of more than 25,000, imprisonment up to 7 years, or else it will be 2 years, less than 25,000. And where they have prepared a false return, suppose they have prepared a false return, imprisonment up to 7 years. 271J says that where a certificate is not issued correctly by accountant, merchant banker, registered valuer, he will be penalized with 10,000 per certificate. 10,000 per report or per certificate will be the penalty. These are the liability of auditor under income tax law. Then company audit related topics. Let us take up the company audit related topics. In company audit related topics, first of all, you have the common same provision, eligibility, qualification, disqualification of auditor. So when all auditor will be disqualified to act as an auditor, like body, corporate, employer, officer of a company, security or interest held by the any person, partner, relative in company, subsidiary, holding, associate, subsidiary of holding company, direct indebtedness of amount exceeding 5 lakhs, guarantee exceeding 1 lakh. Then there's a where, what you can say, where business relationship is there, where limit is there, where fraud has happened, a relative is a director, like that. So disqualification of auditor, you are very much comfortable. I'm sure about it. Then also other topics also you are very much comfortable. That is selection of auditor by the audit committee, appointment of auditor, removal of auditor, rights of auditor, duties of auditor. So let me not touch on this topic, not required, because anyway you are very much comfortable on this topic. But important thing is CARO 2020. CARO 2020 has come up, and short you may get a question from this CARO 2020. What is CARO? Companies Auditors Report Order. It is a type of audit report. CARO 2020 is a type of audit report. Okay. It is applicable to all the companies, including foreign company. It is not applicable to banking company, insurance company, not applicable to them. Whenever we talk about the, what you can say, the CARO 2020, that's the thing here. So what has happened, my dear soldiers? We talk about the CARO 2020, that's the thing here. So CARO 2020, that is Companies Auditors Report Order 2020. Okay, that's the thing here. Now here, what are the CARO is applicable to all companies, including foreign company, not applicable to banking company, insurance company, Section 8 company, 1-person company, small company, private limited company. There are 3 conditions. Paid up share capital reserves and surplus less than 1 crore, turnover less than 10 crores, and loan from a bank and financial institution less than 1 crore. Now, what is the first one? Property, plant, equipment, and intangible assets. Are they maintaining proper records for property, plant, equipment, showing full particulars, quantitative details? Are they maintaining proper records for intangible assets? And whether the title of immovable property belong to the company. If not, give the details, give the reason. If it belongs to promoter, director, give the details. Then revaluation of PPE and intangible asset, and whether revaluation is 10% or more. Revaluation stands to be 10% or more. You need to look into that actually. Then in case of the auditor actually, so whether any revaluation is done, that you have to be very clear actually here. Then in case of, what you can say, intangible assets, that's a thing here. And also whether any proceeding is pending against Benami Transaction Prohibition Act, that you have to highlight actually. Inventory, whether physical verification of inventory is done within a reasonable interval, and whether the quarterly returns which are submitted to the bank or financial institution in case of ODCC, exposure more than 5 crores, is matching with the books of account. Then LICs. Now, what is LICs? Loans and advances given, investments made by the company, guarantees provided by the company, securities provided by the company. I repeat again, loans and advances given by the company, investments made by the company, guarantees provided by the company, securities provided by the company. So, LICs. So, now what has happened is that it's an outflow for the company. So, whether LICs given to SAJ means subsidiary, associate, joint venture, LICs other than SAJ, then loans and advances, whether they are given on demand, fresh loans and advances are given to terminate the existing loans and advances, like that you have to highlight. And whether reasonable steps are taken if there is a delay more than 90 days, whether any reasonable steps are taken or not, that you have to highlight actually. So I repeat again one more time, whether reasonable steps are taken where the delay is more than 90 days, that's the thing here. So is there a reasonable steps is being taken or not, that you have to highlight actually, that's the thing here. So whether reasonable steps are taken, that's the thing here. Okay, fine. So these are the pointers you need to understand actually. So whether the reasonable steps are taken or not, that you need to highlight actually, that's the thing here. Then next one. So these are the, what you can say, the pointers as far as the entity is concerned. Then next one, we have what you can say, LICs 185, 186. So LICs 185, 186, clause 4 is an extension of clause 3. Have you complied with the provision of 185? That is, no loans, guarantee securities to the director. And 186 talks about the limits of how much LICs you can make. Then clause 5 talks about public deposit. If public deposit you're accepting, you should comply with 73 to 76 RBI guidelines, RBI directives, order of court, NCLT, company law board. Okay, that's the thing here. Then clause 6 talks about cost record, whether the company is maintaining cost record as per section 148. Then income tax assessment. So whether any income is unrecorded as per tax assessment under Income Tax Act of 1961. Then loans and borrowings, whether loans and borrowings given, loans and borrowings, whether company has defaulted in the repayment of loans and borrowings. So is there a default by the company in case of the, what you can say, the loans and borrowings? Have they defaulted in the payment of, what you can say, the loans and borrowings? So whether there is any kind of default is involved or not, that as an auditor you have to check. So is there a default as far as the loans and borrowings are concerned? That's the thing here. So whether any kind of default has happened, that as an auditor you have to check. That's the thing here. So default, whether any kind of default has happened, that's the thing actually here. Okay. So whether a company has defaulted in the payment of, what you can say, the loans and borrowings, this is the point you need to note actually here. Then whether the, what you can say, any kind of default has happened actually, that's the thing here. So whether any kind of default has happened, and that is what you need to understand actually. So default has happened as far as the loans and borrowings are concerned. And then short-term loan applied for long-term purposes, whether the loans and borrowings are taken on the pledging of the securities of SAJ, subsidiary, associates, joint venture, and whether the loans and borrowings are taken to meet the obligation of SAJ, and whether company is declared as a willful defaulter, you have to highlight those points. And you have the clause number 10, which talks about money raised by way of IPO, further public offer, then preferential allotment, private placement. Okay, so by of shares and debentures. Then fraud. This is one of the very favorite areas. Clause 11, fraud on the company, fraud by the company. And now they have amended. They have added even that you have to report under ADT 4 to central government. Even they have added that point also. And whistleblower norms they have highlighted here. Nidhi company, yes, Nidhi company, the net owned funds to deposit should not be more than 1/20. And at least they should make 10% as term deposit. Then clause 13 talks about related party transaction, related party disclosure. As per section 188, for certain related party transaction, you require approval of the audit committee. Clause 14 talks about internal auditor, whether company is having an internal auditor which is consistent with the size and the nature of organization, and whether external auditor has relied upon the report of the internal auditor. Section 192 deals with non-cash transaction. Then it deals with the NBFC. What is NBFC? Non-banking finance companies. That's the thing here. Then next one, it is the cash losses actually here. So in NBFC, basically company is a core investment company. Have they complied with the requirement of core investment company? and whether company is doing NBFC activity, housing finance activity, without obtaining a certificate of registration. Then cash losses, actually, that's the thing here. So whether the company is having a cash losses, that's the scenario actually here. So are they having any kind of cash losses in the current year and the previous year? Cash losses means before adjusting depreciation and provision. Then whether the auditor has resigned, previous auditor has resigned, whether the reason has been considered. So resignation of stat auditor, what is the reason why he has resigned? Then next one, by considering financial ratio, aging, realization of financial asset, settlement, payment of financial liability, auditor's knowledge, management's knowledge, and management future plan, other information, whether is there a material uncertainty in realizing the asset and settling the liability, in meeting out the liabilities. So is there any, this can be an important one. Okay, please focus on that. And then unspent amount of CSR, unspent amount should be transferred to a recognized fund under Schedule 7. Then if any qualification adverse remark is made by the auditor of a component, so whether it has been considered by the auditor of a consolidated financial statement. This is the only one clause applicable to audit of consolidated financial statement. CARO 2020, sure short. Please be thorough and ready for a question on CARO 2020. Sure short they will ask. Then important changes in Schedule 3. See, company audit, you should focus more on the Schedule 3, focus more on that to Division 2 of Schedule 3, very, very important for you. You should see how the format of balance sheet P&L. You should also focus on the CARO 2020. You should focus on dividend. Dividend is very, very important, surprisingly. Very, very important part. So these topics you should be very thorough with. Okay. Then, of course, the regular section 141 is important. Qualification of auditor. 143, duties of auditor. Then 147, fines and penalty for contravention. Those things are very, very important. Okay, remember them. Now, I told you wherever there is number, you should think of MCQ. 147 talks about penalty. Okay, contravention by the company. Penalty is 25,000 to 5 lakh. Now, that number you should remember, write down and keep it. It is a high potential MCQ question. Wherever you see number, write down and keep it. Now, important changes in Schedule 3. First of all, rounding off is made compulsory. Earlier, rounding off was not compulsory. Now it is compulsory. Less than 100 crore, you can make round off to maximum hundreds, thousands, or lakhs. More than 100 crores, you can make round off to crores, 2 crores, lakhs, thousands. Like that, you can do round off. Decimals also you can show. Then assets, now you should show as property, plant, equipment, and intangible asset. You should show the, instead of heading asset, property, plant, equipment, and intangible asset. Now, promoter shareholding and changes in them should be reflected. It's compulsory. Earlier, they were asking you to reflect 5% holding. Now, 5% holding also you should reflect, plus promoter shareholding should also be reflected. Current maturities of long-term borrowing is shifted from, now, see what happens is that current maturities of long-term borrowing, it was always shown under other financial liabilities. Other financial liabilities. Okay. So now what they have done is that they are saying that the current maturities of long-term borrowing. See, whenever there's a long-term borrowing, it has got two components. What is payable within 12 months? What is payable more than 12 months? What is payable within 12 months? It was always shown under other financial liability, under the Division 2. And in the Division 1, other current asset, other current liability. Now, here it was shown under other financial liability. Now, what they say that what is payable for 12 months, that you show under short-term borrowing. And what is payable beyond 12 months, you show under long-term borrowing. That is a very important change they have brought in. Okay. So that's the thing here. So you be careful with this. Then trade payable, principal interest payable to MSMED. What is the interest paid? What is the interest due? What is the interest accrued and unpaid? You have to make a thorough disclosure of the same. Micro entity is one whose turnover is less than 5 crore, where the investment in asset, property, plant, equipment is less than 1 crore. Then small entity are those where the turnover less than 50 crores, investment in property, plant, equipment less than 10 crore. And medium enterprises are those where the turnover is less than 250 crores and investment in property, plant, equipment is less than 50 crores. So any amount payable to micro, small, medium enterprises, you have to make a separate disclosure. Okay. And Aging, surprisingly, they're giving aging for trade payable. Aging less than 1 year, 1 to 2 years, 2 to 3 years, more than 3 years. Aging, they are highlighting about the aging. That is one big change they have brought in. And next one, when it comes to the trade receivable, my dear soldiers, understand that in case of a trade receivable, undisputed trade receivable good, undisputed trade receivable doubtful, disputed trade receivable good, disputed trade receivable doubtful. So less than 6 months, 6 months to 1 year, 1 to 2 years, 2 to 3 years, and more than 3 years, you have to make a separate disclosure of the same. That's the thing here. Then title deed of immovable property not held in the name of the company. That's the thing here. So title deed of immovable property, which is not held in the name of the company, that you have to make a disclosure. This is coming from CARO 2020. The aging of trade receivable is also a surprising new change they have brought in. Revaluation of property, plant, equipment, and revaluation, and who is the registered valuer. Now, this is also coming from CARO. Many points of CARO are now shifted to Schedule 3 also. Then details of cryptocurrency, virtual currency, what is the profit or loss on the transaction of the cryptocurrency or virtual currency, what is the deposit from a person who is invested in cryptocurrency. Then undisclosed income surrendered, disclosed as per tax assessment under Income Tax Act. Now, this is also another new thing which is coming up, which is from CARO. From CARO, if you read CARO 2020, most of the disclosures are here. Then CSR, this is clause 20 of CARO. What is the amount which is unspent? What is the shortfall? What is the reason? If there's a shortfall in spending the money, you should transfer to a specified fund under Schedule 7 of Section 135. Then title deed of immovable property is the name of the company own name. Is already we discussed. Title deed of immovable property, that this thing, if it is not in the company's name, make a separate disclosure and give reason. This is again coming from CARO 2020. Then utilization of borrowed funds, share premium. So how the borrowed funds have been utilized. So have you lent the borrowed funds to a foreign entity? So have you lent a borrowed funds to a foreign entity? That's the thing here. And that intermediary will lend to the ultimate beneficiary. That's the thing here. So what has happened actually here, see, sometimes whether the transaction, this is mainly they are trying to target any money laundering has happened. Prevention of Money Laundering Act. See what happened? I borrowed the money, then I took 100 crores, I gave 100 crores straight away to a foreign entity. So is it a case of a money laundering? They are asking actually. That's the thing here. So I'm just acting as an intermediary. Similarly, company has received from a funding party and lent to others on behalf of funding party. I like pass in, pass through. I receive the money, give it. Is it, why you are doing this? Why can't you directly transfer to that entity? So again, it's a case of money laundering or what you have to check. Then proceeding initiated pending against company under Benami Transaction Prohibition Act 1988. So is there a prohibition? Is there any proceeding initiated or pending against company under Benami Transaction Prohibition Act of 1988? So whether any proceeding is initiated against the company under Benami Transaction Prohibition Act, that's the thing here. So is there any proceeding which is being initiated? That's the thing here. So that again, it is coming from the point of CARO. Then willful defaulter. This is already given in the clause 9 of CARO. Date of declaration, details of default to bank and financial institution. Okay, that's the thing here. So these are all important changes in Schedule 3. You should be aware of these changes. Then coming up to audit of consolidated financial statement. In audit of consolidated financial statement, see what happens is that you should be aware of the two concepts, permanent consolidation adjustment and current period consolidation adjustment. So consolidated financial statement means what? Consolidated balance sheet, consolidated P&L, consolidated cash flow statement, consolidated notes to accounts. So when the financial statement of the group company, that is holding, subsidiary, associate, joint venture, they are shown as one single economic entity, it is known as a consolidated financial statement. How do you do the consolidation? First, you should determine the minority interest or a non-controlling interest. Minority interest as per AS 21 and non-controlling interest as per Ind AS 110. Then second one is that minority interest and non-controlling interest you have to look into. Once you take up the minority interest and non-controlling interest, that's the thing here. So first is minority interest and the non-controlling interest. That's the thing here. And next one, my dear soldiers, is that second thing is that you should determine the goodwill or capital reserve. Now, these two adjustments are done only once. First time when you prepare CFS, they are known as permanent consolidation adjustment. Whereas what is the example for current period consolidation adjustment? These adjustments are done every year when you prepare CFS. Example, elimination of intra-company profits, elimination of intra-company indebtedness, elimination of intra-company interest, elimination of intra-company management fees, elimination of profit on sale of asset. So harmonization of accounting policy, subsequent events. So these things and deferred tax asset, these adjustments are done every year when you prepare a CFS. When it comes to reporting, see what happens. The same principal auditor will be the auditor of the components. Then in such case, the auditor will express an opinion on the consolidated financial statement. But sometimes the principal auditor will not be the auditor of the component, auditor of the subsidiary. In such case, he will rely upon the work of the other auditor. Similarly, what happens is that sometimes I rely upon the work of other person, but it is located in a foreign jurisdiction, and the financial statements are prepared as per the local gap of that country. Sometimes we do audit, but the audit has to be done only as per standards on auditing issued by ICAI. And sometimes these components are unaudited. If it is unaudited, if it is material, if it is unaudited, and if it is material, then you have to give a modified opinion. In audit of consolidated financial statement, please focus on how, as a auditor, you will ensure completeness of the information for consolidated financial statement. Completeness means, example, Reliance has got more than 200 subsidiary companies. How do you ensure the completeness of these various information? How do you ensure that? That you have to be very clear. Then completeness. So you have to ensure what you can say the completeness of these entities are not, that you have to understand actually. That's the thing here. So we look into what you can say the completeness of the information. That's the thing here. So first one, you have permanent consolidation adjustment, current period consolidation adjustment, and reporting. That's the thing here. Okay. Then you also have what you can. So first you have permanent consolidation adjustment, current period consolidation adjustment, and what you can say the reporting. So also focus on what you can say the reporting. That's the thing here. So reporting is there. Then after ensuring the completeness of information, they may ask you what is the responsibility of the parent company in consolidation. Then they also talk about the control. Now see what happens. AS 21, what they say, that if the control is temporary, treated as a current asset, the investment in the subsidiary company. But in case of Ind AS, they say they disregard the concept of temporary control. They say you have to prepare a CFS. Suppose say you made an investment, you are holding for a temporary period, that is disregarded. Completely it is disregarded. That's the thing here. Okay. This is all about audit of CFS. Then audit of public sector undertaking. 5 different types of audit are there. Comprehensive audit. You should be thorough with economy, efficiency, effectiveness of the public sector undertaking. I repeat again. First, you straight away read comprehensive audit. Economy, efficiency, effectiveness of the public sector undertaking. Then proprietary audit, whether utmost care is taken to spend the public money. Audit of public sector undertaking is nothing but government company audit. Government company audit is totally 5 different types of government company audit. Okay, because 5 different types of audit are there for government company. Okay. Now, proprietary audit, basically, you should not spend more than what an occasion demands. You should be careful in spending the money. Performance audit deals with economy, efficiency, effectiveness of the government schemes and program. Comprehensive audit also deals with economy, efficiency, effectiveness. But economy, efficiency, effectiveness of public sector undertaking. Performance audit deals with economy, efficiency, and effectiveness of the government schemes and program. First, you read comprehensive audit thoroughly. Then you read performance audit thoroughly. Then proprietary audit. These 3 audits you read thoroughly. Straight away go and read these 3 audits. Okay, very, very important. Compliance audit, so whether there is a compliance of laws and regulation. Financial audit, same thing. We have to obtain a reasonable assurance that whether financial statements are free from material misstatement and are they prepared as per applicable financial reporting framework. Then you also have what you can say the audit of Nbfc. we also have a concept of audit of Nbfc. Whenever we talk about the audit of what you can say Nbfc, whenever we discuss about the concept of what you can say the audit of what you can say the Nbfc. So suppose say here we are dealing with the concept of what you can say the audit of Nbfc. Now Nbfc is like a finance company. That is why it's a part of company audit related chapter. Audit of Nbfc, please focus on different classification of fraud and reporting requirement. Nbfc, all types of Nbfc, for example, have they obtained certificate of registration? Nbfc, what happens? The financial asset should be more than 50% of total asset. Financial income should be more than 50% of total income. That such kind of entity is a Nbfc. It is doing a what you can say Nbfc activity. That's the thing here. So now these are the point you need to highlight. Actually, that's the thing here. So audit of Nbfc, that's the thing here. So audit of Nbfc, you need to be very clear with this. And certificate of registration, is it obtained or not? Nbfc, then again accepting public deposit, not accepting public deposit. If they accept public deposit, then you need to comply with prudential norms of income recognition, asset classification. Have they accepted public deposit from shareholders? Have they accepted public deposit by which is not defined in the definition of public deposit? Whether proper credit rating is obtained on public deposit. So this area can be tested. Credit rating where public deposits are accepted. Then Nbfc not accepting public deposit, they should pass a board resolution for not accepting public deposit. Have they accepted public deposit? Then they have to look into microfinance institution, then income recognition, asset classification. So audit of Nbfc, very, very important actually. So reporting is very important. Classification of fraud also is very important. Fraud, forgery, then what you can say, forgery, then cash shortages actually. Those kind of things you have to highlight. Then Nbfc, very, very important. They may ask corporate governance. When we talk about corporate governance, what happens is that corporate governance, various types of committee are there. Audit committee, nomination remuneration committee, and risk management committee, stakeholder relationship committee. See, as I told you, a lot of MCQ questions are being asked on this because it involves number. For example, audit committee, at least 2/3 of the directors should be independent directors. Now the 2/3, at least 2/3, wherever you see number, it is a potential MCQ question. So audit committee, there has to be a mandatory review of by audit committee. So management discussion analysis, internal control weaknesses, internal auditors report, mandatory review by the audit committee. Okay. Then further, it's basically corporate governance is a topic related to audit of listed company. Then you have to look into the composition of the directors. First of all, at least 50% of the directors should be non-executive director. And at least what you can say, at least 1/3 of the directors should be independent director if the chairman is non-executive director. If the chairman is executive director, then at least 50% should be independent director. If the chairman is a promoter founder, then 50% should be independent director. If the company has issued superiority rights authority, then all the members of audit committee should be independent director. So, and also director can be member in 10 committees. He can be member in 10 committees. So director can be member in 10 different committees, 10 different committees. He can be a member. That's the thing here. So director can be a member in the 10 different committees. That's the thing here. Okay. So these are the points you need to highlight, my dear soldiers. That's the thing is that. So now in such case, actually, this is what you need to understand actually. So what happens is that as an auditor, you have to look into this committee, and that's the thing here. Okay. So these are the pointers you need to keep in mind as far as the audit committee is concerned. That's the thing here. You need to look into the composition of the director, the composition of the board of directors. That's the thing here. Audit committee, at least 2/3 should be independent director. And the company has issued superiority rights share, all should be independent director, a member of audit committee. And we should have one woman director. And if it is the top 500 listed company, then there should be one woman non-executive director, independent director. Okay, so read that. Please read that about the corporate governance. Now, corporate governance also in November 22 RTP, they have given amendments and changes actually here. They have highlighted that now at least 2/3 of the members should be a member of audit committee should be independent director. And they have highlighted that you don't have to see there's a mandatory reporting by audit committee. They say that statement of related party then need not be a mandatory review by the audit committee. The audit committee need not mandatory review. That's the thing here. Now, chairperson of top 500 listed company. There was a chairperson of top 500 listed company. He should be a non-executive director and he should not be related to MD and CEO. He should not be related to MD and CEO. That's the thing here. Okay. So this provision is that, see, the chairperson of the company, of the board, should be a non-executive director and of top 500 listed company. They say that, and he should not be related to MD or chief executive officer. That's the thing here. Okay. So these are certain things actually here. Then when we talk about the independent director should possess integrity. He should not be a promoter. He should not be, so he should be a person of high integrity. In the RTP, they have given the definition of independent director. They have elaborated the definition of independent director further. He is a non-executive director and it gives a negative list who cannot act as an independent director. Negative list is given. Negative list, for example, say relative of the director of LHAS. LHAS means listed entity holding associate subsidiary. Then relative of the relative of director of LHAS. Then promoter and relative of LHAS. Okay, promoter of LHAS and his relative. KMP of LHAS and his relative. KMP means key management person, employee, ex-employee. Okay, for preceding 3 years of any LHAS, you cannot be an independent director. These are all negative list. Auditor, company secretary, a cost accountant, legal and professional firm, they cannot act as independent director. Person who has not attained the age of 21 years cannot act as independent director. Person having a voting power, person having a pecuniary relationship, person who is a CEO, CFO, where 25% of donation is received from promoter, director, LHAS. So they have changed they have highlighted the definition of independent director. Please read that. This is a change which has happened highlighted in the November 22 RTP. That's the thing here. Okay. And then they have given thorough explanation about how is the functioning of stakeholder relationship committee, risk management committee. That is one change they have brought in. Means they have explained more detailed procedure about risk management and stakeholder relationship. This is one thing you should be highlighting it actually. That's the thing here. Okay. Then next one, part 4. Let us get into the discussion on part 4. Part 4 deals with other topics, other chapters. First of all, let us talk about insurance. Now, insurance majorly, it revolves around 3 topics: general insurance, reinsurance, and life insurance. Now, what is the main income for insurance company? Premium income. See the cover note of the policy issued. Cover note of the policy issued. No risk should be assumed unless the premium is received or guarantee is received. This is one question which is often asked. No risk should be assumed. Then premium should be kept in a separate bank account. Policy should be issued within a reasonable point of time. So these are certain things we need to understand about the, what you can say, the general insurance. General insurance is all about this actually. That's the thing here. So we whenever we talk about the, what you can say, general insurance, these are the pointers, aspects you need to understand about the general insurance. That's the thing here. Okay. So this is the point actually. That's the thing here. So first one, my dear soldiers, is the, what you can say, general insurance. That's the thing here. Okay. Is the first and the foremost thing actually here. Okay. Next one, we talk about what you can say, the life insurance. We discuss about the aspect, what you call it as, what you can say, the life insurance. That's the thing here. Whenever we talk about what, so first is what you can say, general insurance. Then next one you have the, in general insurance, see, premium you focus on claims, commission to the agent, then premium outstanding, agent balances. You focus on certain topics which are regularly asked. Then in case of life insurance, now the free look cancellation, then actuarial valuation, then underwriting. These are all some topics which are very important. But premium, claims, investments, They are the lifeline of insurance. And reinsurance, basically, they highlight about the different types of insurance, facultative reinsurance, treaty reinsurance. See, insurance is a contract of indemnity whereby risk of a person is covered by another person. Then trade credit insurance. This is another important topic. We should be knowing it actually. So it's a pretty plain, straightforward, no much changes and other things actually. Next one, that's FLC is free look cancellation and lapsation of the policy. Policy will lapse when you don't make the payment of premium. All the benefits in the policy are lost. Then part 4 talks about what you can say internal audit, management audit, and operational audit. That's the thing here. So internal audit, management audit, and what you can say the operational audit. That's the thing here. So now internal audit, management audit, and what you can say the operational audit. That's the thing here. So now this is what you need to understand actually. That's the thing here. So the part 4 deals with what you can say the internal audit, management audit, and what you can say the operational audit. Now internal audit, these are the topics which we deal actually here. Actually, you should know the difference between management audit and operational audit. Internal audit, mainly you should read with standard SA 610, relying upon the work of internal auditor. And section 138, you should read about internal audit under Companies Act. Management audit, basically, it's an audit of management. Operational audit is an audit for management. Management audit deals with the quality of managing. Operational audit deals with the quality of operations. Then they may ask you a question on behavioral aspect of the audit, management audit, different types of management audit report, oral report, regular written report, then summary report, actually flash report, what we call actually interim written report. Okay, so this is operational audit, different types of operational audit based on function, special purpose audits. These things you have to highlight it actually. Okay, so management audit deals with audit of management. Operational audit deals with the audit of operations. Then investigation, due diligence, and forensic audit. Forensic audit is one area where it's a combination of audit, accounting, investigation, and finally it ends in the court of law. Forensic audit it's a type of investigation where it ends in the court of law. So forensic audit, different approaches in forensic audit. First, you focus on forensic audit because this is a new area introduced. You should be very careful. Then you also have due diligence. Due diligence is based on two topics: overvalued asset and hidden liability. I repeat, overvalued asset and hidden liability. So due diligence is based on these two topics, that is overvalued asset and hidden liability. That is what due diligence is based on. And then it is based on what you can say investigation. Investigation is like a basic topic. Nowadays, what is happening? I see a lot of MCQ being asked on the powers of inspector, section 217. 217, inspector can keep the books for 180 days. 180 days he can keep the books actually. That is the thing actually. So lot of questions and queries I see on the investigation, and that's the thing here. Okay. So this is the one important pointer which you should see as far as the investigation is concerned. That's the thing here. So investigation and what you can say the due diligence is all about this, and what you can say the financial audit is all about this. That's the thing here. So this is what you need to understand actually as far as the investigation and the due diligence and financial audit is concerned. That's the thing here. Okay. So these are the pointers actually here. Now this is the thing: investigation, due diligence, and financial audit. That's the thing here. Okay. So I hope you are clear. Everybody is clear. Forensic audit, not financial audit, forensic audit. Forensic audit is area where you should focus. Investigation is investigation on behalf of incoming partner, investigation on behalf of bank. These are all regular questions. But now powers of inspector is one area, 217, different type of investigation into the affairs of the company, investigation into the ownership of the company. Those sections you should be focusing on. Okay, fine. Then automated environment. Yes, so when we talk about the automated environment, this is another area where they may ask you a question. Automated environment, you should be It's a process, operation, decision making, accounting is all done using computerized system. That's the thing here. So in automated environment, basically, you should focus on general IT controls, application controls, enterprise risk management. What are the various risk management scenario? You have to be very clear. So general IT controls, again, it is classified into 4 types. That is, you have data center and network operation control. You have the program change control. You have the, what you can say, the access control. And lastly, the application system development and maintenance control. So general IT control, mainly it is a indirect control. It is a pervasive control. It protects the outside world of the computer. Application control protects the inside world of the computer. Like application means software like user limit check, sequence number check, like that. These are the things actually. Okay. So this is the thing actually here. Now you should also understand and document the automated environment. What is the information system they are using, purpose, location, what is the hardware they are using, what is the freeware, what is the middleware they are using, version, architecture, interface. Okay, what is the type of server they are using, in-house, package, outsourcing activities. You should be very clear with these things actually here. So that's mainly understanding of the information systems. That's the thing here. So automated environment, direct questions will come, not much highlight in this actually here. One bank audit, yes. Bank audit, my dear soldiers, bank audit, main heart of bank audit is 3 things. One is advances. Read advances thoroughly actually here. So in case of what you can say, when we talk about the advances, mainly the income recognition, performing asset, non-performing asset, for that classification is done as far as the income recognition is concerned. And in case of bank audit, the prudential norms of standard asset, substandard asset, doubtful asset, loss asset, prudential norms on provisioning, they highlight here. And in case of bank audit, yes, concept of SLR, CRR is very important, and internal control, statutory liquidity ratio, cash reserve ratio. And so bank has to maintain a specified percentage of demand and time liability, certain percentage of demand and time liability in the form of cash with the RBI. That is cash reserve ratio. Demand and time liability means deposit accepted by the bank, like SB account, current account, fixed deposit. You have to take a sum of it. Similarly, a specified percentage should be taken for demand and time liability. That's the thing here. Okay, so these are certain pointers you should be aware actually here as far as the demand and time liability is concerned. That's the thing here. Then next one, as far as the statutory liquidity ratio is concerned, that's the thing here. So all these pointers we should be aware actually here. So bank audit, that's the thing here. And in bank audit, yes, as I told you, advances, you have to focus advances. For example, if advance is guaranteed by central government and it is outstanding for more than 90 days, it is treated as a performing asset, but interest income will not be recognized. Same advances is guaranteed by state government, you have to treat it as a non-performing asset. Advances guaranteed by NSC, Indra Vikas Patra, performing asset, as long as the margin is available. Then advances where it is based on some security of land, it is treated as a, if it is outstanding for more than 90 days, then it is a non-performing asset. Okay, so this is a point actually. Then sale and purchase of NPA, how do you deal with this actually here? What are the peculiar features of the bank? Peculiar features of the bank, mainly it has a large volume of transaction, large complexity of transaction, heavily regulated industry, heavily networked. Transaction can be initiated by the customer directly. Bank audit reports, long form audit report, Ghosh committee report, Jilani committee report, SLR compliance report, then adverse deposit ratio report. Several reports are there in case of the bank. Okay. Now, one thing which I did not make, I think I've taken another PPT, is tax audit. Tax audit, very important amendment has happened. That is, the limit of tax audit is now turnover for a business is 10 crores, more than 10 crores. But condition is that, see, business, when a business turnover is more than 10 crores, tax audit is applicable And also cash receipt, in that cash receipt should be 5%, less than 5%, and bank receipt should be less than 5% or less than 5%. In case of total cash payment and cash receipt should be maximum 5% of the total cash receipt, total receipts and payment. This is the condition. Again, I'll repeat. In case of tax audit 44AB, tax audit could not make it here actually. So one very important amendment and change. What is the important amendment and change in tax audit is that business turnover is now limit is exceeding 10 crore for assessment year 22-23. And in case of tax audit, the limit will be more than 10 crores if the cash receipt and cash payment, cash receipt is not exceeding 5% of total receipts and cash payment is not exceeding total 5% of total payments. Okay, then it is limit is 10 crore. Otherwise, the limit will be 1 crore. Otherwise, the limit will be exceeding 1 crore, just like old system. Professionals, it is exceeding 50 lakhs, and where you don't declare income on presumptive taxation basis, 44AD, AE, 44AD, you should read income because 44AD, the turnover less than 2 crore, and if you don't declare as per 6%, 8%, then it is tax audit will be applicable. That's how situation arises actually. Okay. Tax audit mainly, please read the clause 4 of 3CD, which talks about registration number under indirect taxes like GST, excise duty, custom duty. So registration number under indirect tax. Clause 4 is very important. Clause 8, which talks about clause under which the tax audit is applicable. Is it business, profession, or when you don't declare income on presumptive taxation basis? Okay. Then clause 10 talks about the nature of business. Clause 11 of 3CD talks about the, what you can say, the books of accounts maintained, prescribed. Clause 13 talks about the, clause 12 talks about where the profit includes the income under presumptive basis. So here clause 4 is important, 8 is important, then 10, nature of business, 11, it talks about the books of accounts maintained, 12. So these are certain, what you can say, clauses which stands to be important. That's the thing here. So these are the pointers you should note and understand actually. That's the thing here. Okay. These are the various clauses which stands to be important in nature. That's the thing here. So statutory liquidity ratio, cash reserve ratio, all these ratios stands to be important actually. That's the point actually. Okay. I hope you're clear. So statutory liquidity ratio, cash reserve ratio, that's the thing here. Okay. So these are the pointers as far as the bank audit is concerned. That's the thing here. Okay. Then next one, the statutory liquidity ratio, cash reserve ratio. This is the pointer actually here. And then, my dear soldiers, what happens is that, so that will not come. So clause 11 is important. Clause 13 is important. Okay. 12 also important. 13 is talking about method of accounting and any change in the method of accounting. Is there a deviation from accounting standard under 145A, that is ICDS, talks about income computation disclosure standards. Then clause 14, valuation of closing stock, important. Clause 16, very, very important. Amount not credited to P&L being section 28 item, escalation claims. Okay, then any pro forma credits, refund of taxes, any other item of income, then capital receipts. 16 is very important. 17 talks about any immovable property sold less than the, what you can say, the price given by the prescribed authority. 17 and 30B of 3CD are almost similar because you can give discount up to 20%. 20% of the value less than the substantial value you can register, no problem. And then it goes to further, it gets into the further discussion actually here on clause 21. 21, very important, very, very important. 21 talks about amount debited to P&L being capital expenditure, personal expenditure, advertisement expenditure of a political party, fines and penalties, club expenditure. Okay, TDS 21B talks about TDS, and 21D talks about cash payment of more than 10,000 should be done by account pay check. If it is the goods transport agency, then the limit is around 35,000. Okay, cash payment, that's the thing here. So this is clause 21 is important in that terms. Then 23 talks about related party. Clause 23, please read it. Related party, very, very important. Then clause 26 talks about 43B item. 43B item means what? Whenever you make actual payment, you can claim deduction. 43B, clause 26 is important. 28, 29, very, very important actually. 28, 29 talks about where you are receiving shares for inadequate consideration or issuing shares for inadequate consideration. Issuing shares for more than the fair market value, but you're receiving shares for inadequate consideration. Our company is issuing shares more than fair market value. Mainly, this is meant to target startups where they collect huge amount of money. Then 31, the amount of loan accepted, taken, 269 SS, then repaid 2690, 269 ST where amount is 2 lakhs or more. So 31 is important that way. Then 32 talks about carry forward of losses. Okay. Then 34 on TDS, very, very important. Read the TDS provision to be read actually very clearly. Then 37 on cost audit is important, very, very important. 37 is important. 40 on accounting ratio is important. 40. 41 talks about refund and demand under any other law. Other law other than income tax and wealth tax. Other law means GST, indirect taxes. So any refund demand. Okay. And now latest 44 has been added, which talks about what the expenditure on which GST is being paid. So expenditure on which GST is being paid actually like that. That's the thing here. So they highlight about that. Okay. So they are asking separate disclosure about the GST expenditure. Okay. All of you are clear? Everybody is clear? All of you are clear? Yes. So this is the thing in case of tax audit. Tax audit, certain clauses are very, very important, very relevant. Next one. This is all about the part 4. Now, how to prepare for auditing examination? How you should prepare? First thing, in auditing examination, you should follow 30-10 approach. Now, what is the 30-10 approach? You should read the subject for 30 minutes and then write down the subject for 10 minutes. So some student was saying, sir, we should read for 30 minutes, take rest for 10 minutes. No resting, sir. Read for 30 minutes, close the book and 10 minutes scribble it. This will enhance your memory like anything. Many students, they complain that, sir, we don't remember. This is one mantra. Read for 30 minutes, then take a break, not break, sorry. Write down for 10 minutes. The 10 minutes you should write down. Again, read for 30 minutes. This cycle, 3 hours, you should do this. After 3 hours, take one break of 40 minutes, 45 minutes, half an hour, whatever it is. Again, after that, again start studying. This will enhance your confidence like anything. Remembering. Then read loudly. You should always read loudly. Because reading loudly leads to self-teaching and self-talking. Read loudly, my dear soldiers. Self-teaching and self-talking. See, for example, those students who read loudly, their concentration is better. And I always self-talk to myself. See, because essay 500 deals with audit evidence. Audit evidence, see, it talks about audit procedure or the audit procedure, inquiry, inspection. So you should remember these points. I talk to myself. So you're talking alone to yourself. Yes. This will increase your understanding of subject. It will increase your understanding of subject in a far better manner. Far better manner. So you have to read loudly. As I told you, it leads to self-teaching and self-talking. That's the thing here. Okay. So this is the thing here. So you have to follow what you can say 30-10 approach. That's the thing here. Read loudly. As I told you, it leads to self-teaching and self-talking. That's the thing here. Okay. That's the thing here. Then you should be always about CA final. CA final actually. I've written here CA inter. CA final actually here. It's always about what you can say CA final. Now, what happens is that all the time you're thinking of CA final, CA final, CA final, CA final. All the time. You're eating, you're thinking of some subject. You're sleeping, you're thinking of some subject. All the time. You're taking bath, you're thinking of some subject in auditing, law, whatever it is. Completely surrender yourself to the CA final. Be passionate. Except when you go to bathroom, only at that point of time, you should not think of anything. You should be neutral mind actually here. Otherwise, at all the time, my dear soldiers, that's the thing here. See, my age, all the time I have to be with God. We are like hitting almost 50 actually. So we have to think of Lord, God, prayer. That's the thing here. You have to be successful means you should keep on thinking about that only. Keep on recalling. You're having food. Keep on recalling. That's the thing here. As if you're madly in love with CA final. CA final. That's the thing here. That passion you bring, you'll be very successful. Very successful. That enjoyment should be there in learning. Ayo, headache, that will not be. Enjoy the process. Definitely will be successful. Be passionate. Then, fourth one is relevant reading. Whenever you take a chapter, relevant, what is relevant in that chapter, first you mark it, then you read that. What is important in that? Have a control over that actually. Here, see, you have to read what is relevant. That's the thing. That is what is relevant. You have to read it, my dear soldiers. For example, past RTP question, past MTP question, last four mock test paper, last four revision test paper actually here. And then previous examination question, important question. You should get into relevant reading. One student was very much interested in bank audit topic. Bank audit, maximum 5 marks will come. And he purchased a guidance notes on bank audit. I said, what are you doing? Why are you purchasing guidance notes? Sir, I'm passionate about bank audit. What happened? Tuku only happened, my dear soldiers. Not a single question came from bank audit. And he failed in that exam miserably. Of course, later he qualified. But he told me, sir, I was so much obsessed with bank audit. I said, I know. And now he's working in a bank. So he's happy that way. See, that's okay. But now, what is relevant, you focus on that. See, knowledge does not have any end. You have to keep learning. There is no end to it actually here. No end to our knowledge actually here. So, relevant, focus on relevant topic actually. Mark important topic, first finish them. I've seen students, they'll spend half an hour reading introduction, reading something irrelevant. Ask yourself, is it important? Will it come in exam as they tested? And other topics which you don't find it important, just read like a storybook. Remember, okay, this. Have a overall picture. MCQ. MCQ, I was surprised that more than 50% of students have not taken hard copy, printout. They are just reading soft copy. Actually, sir, don't do it. Don't do it actually. Already looking at the screen, your eyes get tired. It's better you take a printout and then when you solve MCQ, don't write the answer on the MCQ. Don't mark it the answer. Mark it in a separate sheet and compare. MCQ, first thing is that hard copy you should take up and you should keep it. And then you should start comparing and start reading actually. That is very important and practice now onwards. Some students during cash course, I observed that they had not read MCQ at all. They don't know what is ahead of them. So they think, okay, MCQ is easy. No, sir. You have to have a habit of solving MCQ question from now onwards. MCQ requires a lot of thinking, a lot of so practice in a separate sheet of paper. MCQ will be sometimes and or question. MCQ will be sometimes and or question. Now, what is and or question? Whenever I say and or question, what happens in case of for example, the auditor will communicate with the management and DCWG or withdraw from the engagement. Second sentence, auditor will communicate to the management and DCWG and withdraw from the engagement. Now, sometimes this question will come and or, you have to be very careful. And or MCQ question or correct, incorrect question. Whether this statement is correct. Client is the owner of audit documentation. Incorrect. You have to be very careful while reading. And sometimes definition-based question will be coming. Audit risk is a risk of giving inappropriate opinion. So there may be a definition-based question. Or there may be not question. Which of the following is not to be included in the audit engagement letter? The scope of audit, objective of audit, responsibility of auditor, plan of management. Plan should not be included. Not to be included. You have to be very careful when not questions are being asked. Okay, that's the thing here. So now the questions which are there and are question, correct, incorrect, definition based question, not question. The word will be not, which is of the not the following. MCQ, one thing secret, I told you that numbers, wherever you see numbers, write down separately in a sheet. It may be a high potential for MCQ. As I told you, peer review to be completed within 90 days. Subsequent auditor to be appointed by, in case of government company, by CAG within 180 days. Then clause 1 of part 1 of first schedule. Now, what is clause 1 dealing with? What is clause 5 dealing with? You should know the number. Okay. Then say, for example, say clause 10 of 3CD deals with the nature of business and profession. Wherever you see number, it's there. Number of days, within how many days dividend is declared. It should be transferred to separate bank account within 5 days. It should be distributed within 30 days. Undistributed within 7 days should be transferred to unclaimed dividend account. Then what is a rate of interest which is applicable? 18% actually, in case non-payment of dividend to the shareholders. If there is a delay in transfer to the unpaid dividend amount, 12%. Within for how many days the person will be keeping the books? 180 days. See, you are required to calculate the number of days. 30 days, wherever you see numbers, write down separately, keep it separately. It is going to come. Next one, MCQ will be lengthy question. It will be run into 2-3 pages. What should I do? 2-3 pages, it is running. You should always adopt a policy of part read, part solve. Part read, part solve. Part read, part solve. Read the half question. Go to the MCQ question, solve it. Retaining so much data will be a challenging. Read half question, solve it. Read half question. Part read, part solve. Part read, part solve. This is the strategy technique you should adopt. Then have a habit of writing question, scribbing. Writing, I always keep telling that it enhances your memory by 10 times. So have a habit of writing question also. Script the question. Okay, this is the question. Fine, what is the answer? Sometimes it will avoid confusion in your mind. Some students, they say, for this question, what answer should I write? That is why I keep telling them, either you write the question or heading. Write the heading. Okay, this is the heading, keyword. Then next one. Revision is mandatory. Do a compulsory revision, my dear soldiers. Whatever you're reading, 1 or 2 times revision is must. Now, when you start the examination, should you start the examination with MCQ or with descriptive? 1:45, he will give you descriptive question paper, and 2 o'clock, he will give you MCQ. 2 o'clock, he'll give you MCQ. Okay. So 2 o'clock, he'll give you the MCQ. Fine. From 2 to 2:05, you will take time to fill the details. From 2:05, what should I start? Should I start with descriptive or MCQ? What should I do? Many students, they do a mistake of starting with MCQ. Sir, 900 seconds, your mind was there on descriptive question paper. You were writing the answer in your brain. Your brain was prepared. Now, suddenly, if you start reading MCQ, all effort of that 900 seconds have gone. In fact, you guys are lucky. You're getting 1 day gap. You're getting 15 minutes to read the question paper. Of course, I do agree that when we wrote the exam, our question papers were very small, 3 pages. Yours is running into 10-15 pages. I do agree. You require time. But what happens immediately you start MCQ at 2:05, you're undoing all your effort. You're putting a stress level. So from 2:05 to 3:20, say maybe what you can say 25 minutes each, 25 minutes, 3 questions, descriptive questions, you solve it. 25 minutes, you keep it for them. 3 questions, you write it. And you write the answer for descriptive, 80% it should match with the material. What happens, my dear soldiers, students, it is not matching 80%, it is 80% they'll write own answer, 20% as per the material. Who will give you marks? Who will give you marks? then you will blame everybody in the world except you. So your answer should at least 80% should match the material. If it is more than that, well and good, exact, well and good. That's the thing here. So this is one pointers you should keep in mind actually here. So descriptive, if you should at least whatever wording are, at least 80 to 90% should match with the material. I know 100% is always challenging, but that's okay. You have to do it. Then after writing 3 questions, then keep 40 minutes for MCQ, not more than that. Shall I keep MCQ at the end? No. 40 minutes you keep it for MCQ. You sandwich MCQ in between. In case you don't get the answer for MCQ, you can go to descriptive, and again 10 minutes buffer time will be there at the end. So descriptive 25 minutes each, 5 question, and MCQ 40 minutes. Then again you will have 10 minutes to buffer time and 5 minutes in the beginning you took up. That's how you will complete it. MCQ integrated questions will be there. I told you how to handle MCQ, part read, part solve. What type of MCQ question will get, that also have a pattern. Think of that pattern, my dear soldiers. And whatever answer you're writing, point-wise answer you should write. See, if it is a 3 marks question, write 3 to 4 marks, 1 page you should write. 5 to 6 marks, 1.5 page. Length of the answer. Quality, at least 80% it should match with the material. Point-wise you can write down. Nothing wrong with that. Don't write flow chart unless it's an emergency. Otherwise, don't write any flow chart. Not required. It's emergency, like last 5 minutes is there. There you can write down the flow chart. Now, next one. Don't compromise on food. Some students, they don't have lunch properly, food properly. For example, 2 o'clock exam, they'll start at 12 o'clock. Mom will say, I have food. No, mom, don't disturb me. I will go to exam. And then examination, all will start writing the exam. At 4 o'clock evening, 1 hour before the examination, he had said, he's so tired, so hungry, he'll remember his mother. Brain will not work. Don't compromise on the food. Food you have properly. So don't compromise on the food, then I'll eat all chili item, oily item, all maja only I will do. Arey, maza aa gaya. I'm not trying to drive you in that direction. Homemade food, whatever possible. Sir, I stay in hostel, whatever that is possible, good for your stomach for next few days. Have it. Don't do experimentation. Mexican something, some item, don't do that. Don't do that actually here. But have nice food, proper food you have. Next one, sleep. Don't compromise on the sleep. 6-7 hours. This brain should work in the exam. Some students, they read 20 hours, 2 hours, 1 hour, they'll sleep. Sir, don't do it. Don't do it actually here. 3 hours you should study. Between you should take rest for 40 minutes, 45 minutes. Some students, they take 1 hour rest also. Depends upon them, how it is actually here. So sleep, don't compromise. 6 to 7 hours sleep, don't compromise on that. My student wrote whole night. Next day, he went to examination hall and slept off. What you will do? 6 months again he has to wait. Laba only has to do. Then don't compromise on your focus. Your focus, you should never compromise actually here. Remove all the distractions actually here. Some students have seen, they come out of the social media. They keep very normal small phones actually here. So just switch to small phones actually here. Better Nokia 3310 phones. Don't get into, because your focus is important, very important. If you see what happens, you think that, okay, I will take rest. I will take rest, so I will watch mobile for half an hour. Videos I will watch. Don't do it. You are again putting your brain into some pressure for understanding what is the content of video. Or give your mobile to your parents, give to somebody, but don't touch it. Or you have 3310 mobile. That is a mobile fit made for final students. Please think. You don't have to show Apple iPhone I have. Then I think that you are in a heavy distraction level. Physical activity like yoga, walk 30 minutes walk makes a lot of difference actually here. That's the thing here. So sit for 3 hours continuously, get up, walk for half an hour. Don't carry any gadgets with you. Don't carry any mobile. Just walk long distances. Again, come back. Again, sit for 3 hours. Do some yoga exercise. Do some physical activity. It is very much important. But when you go for long walks, don't carry any gadgets. Leave them aside. No, not required. Mobile usage, you should reduce only to maximum 30 minutes per day. Don't go beyond that. That's the thing here. Okay. So with this, I wish you all the best for the coming examination actually. Okay. So if you have any queries or questions, please ask me without any hesitation. Please ask me.
Hi, sir. Thanks for the wonderful session. You've covered all the important points from all the chapters, and your exam tips are very, very useful. From my exam experience, all the practical things which I have done, you have explained everything, sir. Whatever mistake I have done, you have told me to correct it. And there are a few questions from the students. One second, sir, I will share with you. Tips for MCQ preparation before the exam day.
Tips for MCQ preparation, please focus on the numbers. As I told you, numbers actually here. You should already have a summary notes on various, wherever you see the numbers actually here. Okay. And that is where will help you actually here. Every chapter, you should make a checklist of the points actually here. That these are the, for example, as I told you in company audit, first auditor is appointed within 30 days of incorporation of company. Then if board fails, then members will appoint within 90 days. Wherever you see numbers, section number, you have a checklist of it and run through them actually. Please run through them. That is very much important. It will help you in the last moment. Dividend to be paid within 30 days. And if there is a dividend is unclaimed, then the details of shareholders to be put in the website within 90 days. So most of the questions in MCQ are revolving around numbers. If you make that list for the last moment also, just run through, it'll have a great help for you actually. Definitely great help. Then don't, and when you look at MCQ question, length question, don't get stressed out. Part read, part solve, part read, part solve. That is the thing you will tell yourself. And mentally be prepared that lengthy questions will be there. Okay, fine. Go ahead. Please go ahead, Hemant.
Yes, sir. There is no specific question here. Abhigna only I've asked this question only. Tips for MCQ preparation before the exam day. We have answered for that. And the tips relating to 30 minutes study and 10 minutes writing will boost up their exam preparation. They have said that. And there is no specific question, sir.
Okay.
Can I give thanks note and can we close the session?
Yes, go ahead, Hemant. Go ahead.
Yes, sir. Thanks for all the contents you have given us, sir. This will help the students to revise the whole content within the 3 hour span, and all the exam tips will be very, very helpful. You have addressed all the mistakes which the student will probably do, and many tricks you have solved, and that memory techniques which we have given in your PowerPoint presentation will be very, very, very useful for the students. I thank ICASA for organizing this session, which is giving very most benefit to the exam students who are writing the exam. Thank you, everyone, for attending the session. Can you wind up, sir?
Thank you very much. Thank you very much, Hemant. Kind of you. Thank you very much.